All right, guys. Good morning. Good morning. Hope you guys are well today. It is Thursday. We got jobless claims, unemployment filings. We have the big ones, PPI inflation data today. So yeah, pretty big day. Let's go ahead and get everything up here. Let me get a timer going. How much we got left? We got an hour and 38 and a half minutes left, right? My math is right. Yep, that's right. All right, so we got an hour and 38 minutes left. We're here. Yep. All right, so inflation expected at 0.1% today, 0.1%. And that's month to month. Year over year, it's expected at yeah, so I see some people saying a market crash is going to happen, a recession. I kind of agree. Said I'm listening last 3 years, recession is coming, but recession is not coming. Yeah, I mean, again, it kind of shows you, like, I'm not going to say people are gullible, right? I'm not saying we don't hit a recession. I'm not. It's possible. But I do kind of look at some of it like people who think the market's going to crash every other week, like, obviously they've been wrong. And obviously the market has continued. And I think the overarching point is, like, you can't predict crashes every year. And if you find yourself doing that every single freaking year, like, you've been misled sometime, somewhere. And that might be a hard thing for some people to accept, especially, like you said, if you get wrapped up in politics or whatever it's causing you to think we're going to always crash. The biggest edge in stocks is the market's going to go up long term. And that's the truth. It's going to go up long term. No matter what, it's going to go up long term. Short term, anything could happen. I always tell this when we're talking about gold, because gold, short term, anything could freaking happen. Gold can downtrend for 5 years. But if you hold gold for 20, very consistently, it's going to go up. It's not 100% either. I would say gold's probably a little bit less likely that it's going to go up over a 20-year period, but it's still pretty freaking likely. I would give it like an 80% chance, 90% chance of going up over a 20-year period. And the only time it doesn't is if you really get unlucky and get, like, caught in it. And the reason I say that is because we did have this period here where if you bought it up here, you might get stuck in a downward trending thing. Like, this thing downtrended for 25 years. And so gold, it's not 100%. But the stock market's different. The stock market is just different. If you look at the S&P 500, like, during that same period, here's 1980 to 2005 is the period we're looking at. The S&P gained big percentages. So the S&P is different. The S&P rarely downtrends for any significant, like, yearly time frame. Like, it almost never downtrends over 10 years. Usually it's going to go up over that period of time. What do you think about PPI today? I don't know. Yeah, well, we're starting it a little bit earlier today. It's all good, Yeah, so PPI is expected at 0.1% month over month. Jobless claims are expected same time at 227K. So we'll put that up so you guys can kind of see what's going on. Yeah, Nvidia, the big story is Nvidia all the way up to almost 120s. Big green day yesterday for Nvidia, massive green day, and it took a little while for it to hit. Like, it started to trend upward and then turned around and then headed right back up. ECB cuts. I don't know when. Oh, is the ECB rate decisions today? I didn't even realize. So that drops at 8:15 market time today. They are expecting a 25 basis point cut. They're dropping it from 4.25 down to 3.65. That's a weird percentage. I'm just gonna call that 40. It's 35 plus. It's 35 plus 25, which is 60, right? It's 60, but so I guess, but I don't even know that. Like, I'm gonna call it a 50 basis point cut or something because, yeah, it's about 60 basis points is what they're saying in their interest rate decision. Now, on their deposit facility rate, they're dropping that 25 basis points. But it says on their ECB interest rate decision, it's going from 4.25 to 3.65, which is, again, 60 basis points. So I don't know what they're doing over there in freaking Europe, but yeah, I wish I would have covered the Nvidia thing yesterday. Just, I got freaking beat out of it, and that's all right. Nobody else was covering it. Like, I literally looked at it, and I knew it might affect markets. I looked on YouTube. Literally nobody else was streaming it. And so I wish I would have been able to cover it, but thus is life. And, yeah. Can y'all hear the music? You should be able to. All right, guys. All right. You know, the one thing I feel like I'm missing in my life is big poker tournaments, dude. Like, I've been into poker for over a decade, you know? And it's interesting because, like, when I first got started, I had no money. Like, I had no money to play. I was playing, like, 1 cent, 3 cent. Like, the small blind was 1 cent. The big blind was 3 cents, you know? Or, like, 2 cent, 5 cent. So the tiniest stakes you could ever imagine. And, like, now that I do well, you know? Like, I make decent money. I don't have the time to play anymore, right? I wanted to do the WSOP last year, but we ended up going on vacation with to Michigan with the family, which is understandable, right? But yeah, I feel like I gotta play some, you know. Yeah, online's just not the same. Like, I'm much better at live poker. I'm okay at online poker. My problem is that for somebody with ADHD, it's very hard for me to sit down and focus on poker. I've played it so much, and I play online poker, right? But it's very hard for me to sit down and focus for extended periods of time. And poker is very much like trading, where it's really variance heavy. So like you might do everything right in poker and still lose. Just like you might have an A+ setup, it looks good, you manage it well, and you still lose for whatever reason. Very similar in that regard. But with poker, it's much with poker, it's hard to explain. It's really variance heavy. And so if you're going to let your edge play out, you got to sit down for hours and hours a day, right, and kind of grind that out. And for me, it's a lot harder to sit down and play online poker in that way. You know, it's much harder for me to do that. Live poker's fun. I wouldn't say they're scams. I would say like some of the sites have look at Nvidia at 117.50. Some of the sites have, I'm not going to say scams, but vulnerabilities, right? And the vulnerabilities present themselves in super users. So like say you used to be a developer on a poker site, right? And so you know the code of that poker site. You know, usually they have what's called a random card generator. And so the hands are supposed to be random, and there are algorithms that produce random hands, like random numbers. Like if you're a programmer, you understand there's a lot of different like lines of code you can use to produce random numbers, like formulas, like really they're mathematic formulas. And that's all fine, but some of the developers on some of these sites that no longer work there. So here's an example. So you got let's just call the dude Jim. You got a dude named Jim that was a developer on one of these online poker websites. Right, and then say he leaves that company, you know, but he still knows the code. He still has some of the access to the website, right? So he can create his own, he can modify the code to where he can see everybody's whole cards, right? Everybody's whole cards, and everybody else is just completely oblivious to it. They have no idea that this dude can see your whole cards, right? And this happens. It's called super users on poker websites. And usually the smart move, they a lot of the time they get caught, right? But the smart ones play very small stakes, and they take very careful consideration of how they're going to use that cheat that they have, right? But again, sometimes like Darwinism presents itself in the same way where, you know, and I've been in hands, right? Like I've been in hands where on some of these sites where it was very, very clear that something fishy was going on, right? Like an example of this is I have king pre-flop, and somebody else has 2-5 offsuit, and the person who is playing pretty tight, like not super aggressive prior to this, calls my all-in with like 2-5 offsuit, and I've got king, and then on the flop it comes 2-2-5, right, or whatever it is, and because he knew the cards that were coming, right, he had some type of, you know, super user software thing, whatever, and that happens, right, and so most of the time you're fine on those sites, but there are weird stuff like that, and I'm not going to recommend going to any of them, really. I trust live poker a lot more, and this is coming from somebody that I've played probably 10,000 plus hands of online poker, right? So yeah, I would just be very weary of it, just because there are users. Technology has grown a lot. A lot of the sites are now regulated, you know, and I wish they would legalize it. Like the laws that keep it still illegal are laws that banned you from betting on sports over telephone lines. In the 70s is the laws that are on the books, and they're using those laws to cover, to have like an umbrella over everything, and it's not accurate. And they've tried to stop this. Like they've said, hey, these laws are from the 70s saying you can't bet on sports through telephone lines. This has nothing to do with poker, but for whatever reason, politicians like to pander. Like they say, look how hard I am on crime, you know, and a lot of the time, they're getting some PAC money from some people involved in the casino industry who obviously don't want online poker to take off, so people have to go to the casinos. It's this big thing, of course. Hey, thank you, C. Harris. I appreciate it, brother. Thank you. Well, the reason I say Darwinism is because you're always like occasionally one of the super users get caught, and the way they get caught is because they're playing really dumb with the code. Right, like they're calling hands they shouldn't call that make it very, very clear that they can see the cards, right? So again, like I said, if somebody has king and you've got 2-5 offsuit and you played really tight prior to that, like calling him with 2-5 offsuit, knowing you're gonna win, is gonna raise some alarms in everybody in the table, right? They're gonna say, hey, why did that guy call with 2-5 offsuit? It's not sensical. It doesn't make any sense. Like he risked his tournament life with 2-5 offsuit versus kings and won. And so that's going to raise some alarms, and that's how they usually get caught, is that same way. So, again, if they're smart about it, they would just be very methodical, very careful, fold, lose some pots intentionally, right? Like that's what smart people are going to do if they had that. But yeah, Mike Postle, right? Mike Postle cheating scandal is different though. So Mike Postle was at a live card game, like a streamed card game, or like a streaming card game. And a very similar thing happened where he called some very suspect hands with very suspect like conditions of the pot, right? Like, so he called some hands that he should not have called with, and everybody in the world was like, what the heck was that? Like, why would you call there and win? And so basically Mike Postle, it came out that he was probably somehow like having the whole cards fed to him through an earpiece or something like that. Again, I'm speculating. I can't say 100% for sure, but yeah, that's what they're speculating that happened. I don't think it ever was actually proven though, because it's hard to prove. But yeah, everybody was mad at him. Yeah. Any idea what time Kroger is today? Yeah, I could check. Kroger is at 8 a.m. Eastern time is when it drops. It's expected at 91-cent profit per share EPS on $34.09 billion in revenue. They're supposed to drop at 8 a.m. Eastern time, so we got about 50 minutes for them to drop. Yeah, the earnings call's at 10, but the earnings drop is at 8. Todd. But yeah, appreciate the donation. Well, yeah, usually, like, they'll pay you, Ty. So if you ever want to withdraw, usually they'll pay you, right? As long as it's not, like, if... It depends. Yeah, well, no, so, in Texas, there's no casinos. If you want to go to the casino, you got to basically go to Lake Charles. But in Texas, there's card rooms, and basically, it's illegal to take a rake in these games in Texas. But what they do is they just do a monthly subscription instead. And so there's a lot of card rooms here. Doug Polk, famous poker player, has one in Austin, like a really big card room in Austin. Adobe predictions. Does Adobe drop earnings today? No. When are Adobe earnings? Oh, Adobe earnings are this evening. Adobe, a really interesting company because this is a company that a lot of people thought would fail. Adobe, a lot of people thought that would fail with the rise of AI. They assume that, and understandably, they assume that AI would replace a lot of Adobe's business because Adobe is like the creator of Photoshop, right? They started Photoshop. They're the owner of Photoshop. And so people use Photoshop for digital design and editing and stuff like that. And people assume that AI would completely replace the need for that. But what Adobe did that was really smart is it embraced AI and it added AI to its platforms and it allowed you to use AI in its platforms seamlessly. And so instead of being a detriment to the stock for Adobe, it ended up benefiting the stock. And you can see it's actually up pretty big on the year. If you look at a long-term chart, Adobe was like downtrending really big in 2021. It's almost rebounded all the way back up. So Adobe, a good example of embracing the evolution of technology and not fearing it. You got a lot of people in these companies that just fear technology. It's very clear. And again, sometimes they're kind of putting their head in the sand, ignoring the future, right? Blockbuster is obviously the most famous example of this, but there's a lot of companies that do that. And Adobe is a good example of a company that didn't do that and that actually embraced and evolved with technology. Hey, what's up, Tiny? Yeah, I'm gonna do a poll. Well, today. All right, so does PPI come in higher or lower? Vote on that poll. Let me know what you guys think. Can I trade it with US 30 US dollar balance? Trade what? $30? Just $30 littered. That's nothing in trading. Yeah, you're not gonna be able to trade with that, brother. Not really, at least. I mean, you could, I guess, but $30 is nothing. If you want to be able to trade, you probably need thousands. But yeah, Nvidia is up a huge amount. Look at it bounce right around the previous closing price too. So you can see the previous closing price here at like 117. Trade crypto with 30, I guess. But again, $30 is not going to get you anywhere. All right, guys, we're at 65% higher, 35% lower. Vote on the poll. All right. Yeah. Yeah, there's a lot of like debate controversy. My big problem about like the whole realm of politics is that nobody freaking knows. And everybody sits there arguing about all this stuff that nobody really knows. Like everybody just hates the other side, right? Both sides, right? They both just hate the other side. You can hear the resentment in anybody that speaks about it, right? So like no matter what, and again, I find that to be very unnecessary, right? Like you should be able to agree with either side and not have the other side hate you, right? And if you hate the other side, you're probably right where they want you. You know, you're right where they want you. And so I would just tell everybody this election year to like just stop, take a step back, understand it's okay. No matter what, everything's going to be okay. And just not let it drive your personality too much. Because, you know, this is not the first election. You know, every year they tell you it's the end of the world if this person doesn't get it or this person doesn't get it. And, like, in the end, it's just better to stop, take a step back, and just Yeah, I mean, Bailey, man, the reality of it is, okay, if I blocked them, number one, they're not subscribing anymore. So the 150,000 people we have here are usually people who have not been blocked. But I guess the real problem, Bailey, is this, right? Like, how have you gotten to a position in your life where you're going to the same stream every day, right? Like, just trying to throw me off. Honestly, it gives my channel content. It's not like it's even bad for the channel. Like, me going back and forth with you really probably makes it a little bit more exciting, not less. And so I guess the problem is, like, how have you gotten to a position in your life, Bailey, in which you are so insecure that you harass another YouTuber, right? Like, you got to understand, like, that means your position in life has got to be really rough. And again, I genuinely just kind of pity it. But you could tell you're the same person that comes here day in. Like, every time you get banned, you create another account, you say the same thing. Like, I feel for you, man. I really do. Like, I feel for you. Like, if that's your life, I genuinely feel bad for you. So I wish you the best. You know, you're banned, or I'll just put you in timeout. But yeah, I mean, like I said, I feel like if you put good things out there, you get good things back. You know, and I wish y'all the best, man. Any of the haters, trolls, people who spend their lives, you know, trying to harass and throw me off a little bit, I really just feel bad for you, man. I got a beautiful life, you know, a beautiful life. I really do. And I feel for you, man. I really genuinely do. Like, I wish you guys the best. I mean, you're banned. I'm not going to let you, you know, constantly just try to throw me off. But, like, you know, I wish you the best. You know, focus on good things, guys. If you focus on good things, you'll get good things back. If you spend your life harassing a YouTuber, I've disliked channels, right? But I don't think I've ever disliked a channel enough to go to their comments, especially not day in and day out, just to try to throw them off. That's, you know, that's a little unhinged, right? So, I mean, listen, I wish you the best. You're banned for life, of course, but it's all love. It really is. It's all love. Why the $8 drop and $14 recovery yesterday on the SPY. So what happened, Fu, was the Nvidia conference. The Nvidia conference happened, and people got really optimistic regarding Nvidia. You can kind of see the turn. The Nvidia conference started yesterday at 10:20 market time. And so you can see right at 10:20, basically right here, they debuted something that the market liked. And the market, Nvidia, just powered through the rest of the day and went straight up. All right. It all came from Jensen discussing Nvidia demand. 100%. Yeah, the Nvidia meeting was weird. I exited it and then refreshed it. And then it basically wouldn't let me back in. I'm kind of bummed it wouldn't let me, but it's okay. And yeah, Bailey's going to say, oh, well, that's not me. I don't do that. Of course you don't. Sure, buddy. You know. Again, I wish you the best. I hope you get your issues figured out, you know. Yeah, so Pawn sent me something. Let me see. So yeah, so Jensen Huang said, quote, our company works with every AI company in the world today. We're working with every single data center in the world today. I don't know one data center, one cloud service provider, one computer maker we're not working with. And we have a lot of people on our shoulders and everybody's counting on us, is end quote. And that was, again, Jensen Huang. He was telling that to Goldman CEO David Solomon. Jensen said, again, quote, demand is so great that delivery of our components and our technology and software is really emotional for people. And again, this is what people are asking, how Nvidia rebounded like this. This is how. Like, look at the big, powerful move up. The big, powerful move up. Look at that. And so the market flew up. Look at it, it's at 118s almost, 117s. And Nvidia was under 110 for a long time. Went all the way down to almost $100 a share. And so it has since rebounded. It's almost back up to 120s. I lost about 10% trying to trade in the past 6 months. Now planning to DCA just VU monthly and advice and encouragement. I think you'll probably make a lot of money. I don't know if I would do it with VU personally, which is, what is VU? VU is the Vanguard S&P ETF. So, I mean, yeah, you can do that. Yeah, I mean, it's whatever you want to do, right? It's just another form of the S&P. They all have different fees and different stuff. I don't think that's a bad plan. I think long term you're going to make money on that, most likely, right? It depends on how long you hold it. If you hold it long enough, of course. What I will say is that you need to just be prepared to lose money as well for years potentially in bear markets. You know, okay, I always talk about this, and it's an important thing for people to understand, right? Generally speaking, long term in index funds, you're going to make money, right? And the longer you hold it, the more it's going to keep up with inflation and go up and up and up and up. The reason a lot of people aren't able to take advantage of it is because they do not have the discipline to not touch it. You know, in order to do that, you need to buy and not sell, right? Even in bear markets, even in downward trends, even in all that stuff. DCAing is the way, right? Dollar cost averaging, taking periodic purchases of shares in specific time intervals is the best thing to do. Again, I'm not telling you what to do. I'm not an investment professional. I might be wildly wrong. Maybe VU crashes tomorrow. I have no idea. But if you hold it long term, you are almost certain to make money. And the reason most people don't take advantage of the long term gains that these type of index funds give you is because they end up getting emotional. Any big run, they get emotional when they sell. Any big dip, they get emotional when they sell. And so the reason a lot of people go to financial planners and money managers is because they are able to put their money into these things and not touch it, right? At least not sell it. You can add to it, but not selling is the key. And again, it takes years, right? Who knows what's going to happen, but over a 10, 20, 30 year period, you should make a bunch from it, you know? So. I don't trade very often, just like to follow the market and economy. Yeah. Yeah, all good. No, I'm not saying you don't. I'm just saying that's what you have to have discipline if you want to profit long term. We also have the ECB decision today. So we do have the ECB rate decision today at 8:15 market time. So that's big. What's up, Tommy? What do you think of PPI today? I don't know. PPI, they're basically expecting it to be the same as last time, right? So last time PPI showed up at 0.1%. This time they're expecting it to show up at 0.1%. Year over year, they're expecting it to show up 0.4% lower. So last time it was 2.2% on the year for PPI. This time they're expecting 1.8%, although the yearly PPI reading is much less reliable, I should say. Again, we do have the ECB rate decision coming out. We do have the ECB rate decision. We got President Lagarde speaking. Yeah, you got a 30-year bond auction, so a long-term bond auction today at 2 o'clock. So a long-term bond auction at 2 p.m. Eastern. And tomorrow we got Michigan consumer sentiment data, so that'll be interesting too. Yeah, so we're going to follow all of it. Right, we're going to follow the ECB decision. We're going to follow PPI data. Jobless claims data also releases today. Jobless claims is how many people are filing for unemployment week to week. That drops today. So, again, we'll see what happens. But, yeah, that's something that we're definitely watching. Ja, what are your thoughts on leveraged ETFs? I think they're fine if you have the range to be able to deal with it. You know, leverage ETFs are good as long as you got the range to be able to deal with it. point is, I guess, if you're expecting for 10x gain or 3x gains, you better be ready for 3x losses as well, right? You got to be ready for the swings, I guess, is the point. But aside from that, they're very useful, if you want to take that risk and maximize long-term gains, right? Like, that's the way, probably. But you also have to understand they're a little bit more risky during crash situations, because like a normal crash, right, might make something drop 20-30%, right? But if it's 3x leverage, that turns into 90%. And so that's where it gets sticky, and so I would be careful in those situations. Personally, I would much rather just buy the S&P 500 directly, not the ETF behind it, but the actual S&P, which is SPX, right? This is the actual S&P 500 index, SPX. You can also buy the NASDAQ 100, which is basically the QQQ. It's NDX. Again, this is the NASDAQ 100. It's only open after 9:30, so it's only open during market hours. You can buy the Dow as well, which is, what's the Dow? DJ, what is it? I know the futures contract for the Dow is YM, so you can buy it, but that's different. That's futures. They are expensive. Yeah. Do you think crude has to go lower? I mean, it doesn't have to do anything. Crude will go lower as more stability happens geopolitically. But crude has been basically sideways for a year straight. If you look at October of last year, it's basically where we were now. Maybe a little bit. Actually, no, we're actually down. We're down like 15%, like 12, 13% from where we were in October. But aside from that, we've been in the same range, though, right? So we're at the bottom of the range now. It just depends on what happens. Crude's going to spike if we have like geopolitical stuff going on. DJI. Let me see what it is on. Yeah, so it's not DJIA. Watch out for the volatility decay as well. Sideways action increase don't lose money, not meant for long term. Yeah, for sure. 100%. Hey, John, what do you think was the cause of the big rise in indexes yesterday? The rise was very simple. It was caused by specifically Nvidia pumping up. Nvidia pumped up because Jensen Huang said some really optimistic things during the Communicopia conference yesterday. He basically said that every AI system and every company that has to do with AI uses Nvidia in one way or another. And so there's huge demand for their product, and that made a lot of people optimistic. Nvidia sprouted up to 118s. And that ultimately had a lot of sympathy effects of the rest of the market, right? The rest of the market essentially followed it up. Yeah, I guess you can't invest directly in the S&P, so you got to use like the SPY, VU. They have different fees associated with them, but yeah, you're right. Same thing with like NDX. I just wouldn't buy futures. Futures is the worst option to invest long term. Do you think it was sufficient to move the whole market? Yes. I think the whole market follows Nvidia, Chris. It's been like this for a year and a half now, where the entire market follows Nvidia very, very closely, especially in big volatile days. So yes, I think it certainly influenced the whole market. It's why the market's up like it is, right? The market's up like it is because Nvidia pumped yesterday, and that dragged everything else up with it. So here's the SPY at 555s. Yeah. So SPY is getting close to lifetime highs as well. If you look at the lifetime highs on the SPY, they're right here at 565. So we're $10 away on the SPY. So the SPY could break lifetime highs today, depending on what PPI shows up as. Yeah, so and again, Pawn sent me the quote yesterday. He said, quote, our company works with every AI company in the world. We're working with every single data center in the world. I don't know one data center, one cloud service provider, one computer maker we're not working with. We have a lot of people on our shoulders and everybody's counting on us. Jensen Huang, Nvidia CEO. He also said, quote, demand is so great that delivery of our components and our tech and software is really emotional for people, he added. So basically, people get emotional when they get delivery of their products. Yeah, so that is basically what happened. And that's why markets are certainly up from that yesterday. You could say that at Nvidia earnings instead of letting this AI. Nah, it's all right. The whole market moves with it. What about the shortages? Is it good? Is what good and what shortages? What did Nvidia get to 125 today? I don't know. Nobody knows that. Like a lot of times people ask me questions that nobody freaking knows, right? Like tomorrow at 5:30. Tomorrow at 5:30 in the morning, will the SPY go up or down on a 1 minute candle, you know, while the sky turns green and Jerome Powell stumps his right big toe? I have no freaking idea, guys. I have no freaking idea, you know. If Jerome Powell steps outside tomorrow at 6:30 a.m. and stumps his big toe and his second big toe on his right foot while reading the newspaper, will the S&P 500 move up or down? I have no freaking idea, guys. Why are y'all asking me this stuff? Nobody knows this stuff. Nobody does. Anybody that answers that, seriously, you shouldn't trust them, because they have, like, any reasonable analyst is going to say they don't know about that, because nobody freaking knows. That's completely random, mostly. I use TOS right here, and then for futures, I use Topstep X. No, I know, I'm just messing with you, Steve. You're good. I'm not even talking about you. You just asked me about shortages, right? Really, I was responding not to you, but to, who was I responding to? Somebody else. People are used to the gurus having answers. Any more reports after PPI, which will drop before the Fed meeting? Let me check. So we have University of Michigan consumer sentiment tomorrow on Friday, right? So that's a report. That's a decent one to watch. I'll check next week. Let me check. I got you. I think next week we have retail sales data earlier in the week that does drop. So yeah, next week we have retail sales on Tuesday, industrial production, the Empire State Manufacturing Index on Monday, and that's basically it. So yeah, we've got retail sales is the biggest one that comes out. I'm looking at earnings next week to see if we got anything going on. Tuesday, nothing. Yeah, so earnings season is basically done. We got like General Mills Wednesday morning, but nothing that's going to move it like that. John, what's your strategy trading nonstop dips and pumps like yesterday? I feel like you can only make a lot of lose a lot. Hard to trade with no bounce or rejections. I don't know. I think there's some days where it's just not profitable to trade with your specific system, whatever that is, right? So there's just some days where it's just not meant to be. And you have to have the discipline as a trader to take a step back, recognize that, and take the appropriate steps not to have big drawdowns in your account on those days. Like everybody's gonna lose, right? But you got to be willing to take those steps. Yeah, like we've gotten like here's my stats on this account, right? So we're trading very small on this account, but so far this week, you know, we got a nice little graph. Our profit factor is good. We're averaging green profit. Or here's my stats on this account. Here's my graph. I'm not going to show too much information here, but yeah, we're going to just do September as a whole, right? So here's my stats. So my graph actually looks pretty good. I'm not going to show you anything else about it, but this is my daily cumulative P&L on this account, right? I'm not going to be specific about how much this is, but here's my actual graph for my profits, trading futures on Topstep X, right? So this is my actual funded account graph. So pretty good, right? Here's yesterday, we made some money. So, you know, it gets small, steady gains. I'm taking it very slow, building up profit. Can you grow a $30 US account? Yes, but it's going to take so long, and the edge is going to be so small. Like, you can grow it. It's possible, but it's highly unlikely that you're going to grow a $30 account into anything. The only way you'll grow that $30 account into anything is this, in my opinion, is if you have a $30 account, you can buy one $20 to $30 stock. If it was me personally, again, I'm not telling you what to do. I'm not an investment professional. I'm not liable. If you lose money, you always got to make your own assessment and trade responsibly. I do trade off stream. You're not going to see all my trades. I might have no idea what I'm talking about. Understand CFTC 4.41, hypothetical or simulated performance have limitations. All right, now with that said and out the way, if it was me and I had $30 and I needed to make money, I would research a really extended on the downside stock, like a healthy company, a legacy company that's down big, like really big percentages, and I would buy the dip and just sit on that. And maybe that $30 trade can get turned into like a $50 or $60 trade if you time it correctly. And then you could take that 50 or 60 bucks and then find maybe a different stock that does it and then do it again and do it again. But this is going to take a long time. If you only have $30, what I would honestly do is, instead of trying to trade, trading is a luxury. I know it's marketed to people as like a get-rich-quick scheme, like, hey, you can find financial freedom through trading. And I get it, it's marketed like that. The reality of it is, it's kind of a luxury of people who are comfortable financially. Like, you shouldn't day trade if you only have $30 in the bank, brother. You should not day trade. Day trading is the worst idea you could ever have if you only have $30 in the bank. You know, in order to... Day traders most lose money. And even the ones that end up making money, it takes them years before they do, right? So what does that mean? That means most day traders, you're going to get started, you're going to lose money for years before you win. And that's pretty standard. That's almost all profitable traders are like that. I get it. People who sell you courses might act differently and act like it's easier than it is. It's not. It's incredibly difficult. Almost everybody loses. And if you're struggling financially, it's the worst thing you could do, right? It's genuinely the worst thing you could do. And so if you're struggling financially, my advice to you in that way is to try to figure out a different income stream, right? Like, make money in another way first. Figure out how you can have consistent income first, and then only trade with what you're willing to lose, because the likelihood that you're going to lose it is very, very, very high. All right, that's the best thing I can say. And that's the truth. You know, that's the truth. Can I grow it with today's PPI? I wouldn't, again. No. $30 is just not any, it's nothing. You know, it's less than you would make in one specific trade, let alone the only account that you have is $30. Again, yeah, I would just, no. $30 is not enough money. No offense. It's all good. I wish you the best. I hope you can grow it, you know. Yeah, get a part-time job, start a business, like, figure out what you want to do. All right, guys, the video's up there. Yeah, we got an hour left, basically. We still got almost 600 people here already. So welcome, guys. Welcome. Appreciate everybody joining me today. 58% think higher, 42% think lower. So most people think we're going to come in hot today. What a day yesterday, right, John? It was unbelievable. Yeah, the Nvidia thing just pumped. Honestly, it was kind of crazy because I remember looking at the market yesterday and it was really bearish. Like, a lot of people started to panic because we got some deep bear action. And then the Nvidia conference happened and it just completely rebounded the market, and the market flew back up. Sounds harsh, but that is 100% the best advice for anyone. Yeah, 100%, man. It's what somebody wish, again, I wish somebody told me that. And I had thousands to spend in the beginning, but it was still been a better advice, to be honest, right? Like, almost all day traders lose money. It's one of the reasons I promote funded account programs, because in a funded account program, like on Topstep, you can put up $50, and if you pass their test, get funded, and get $50K in funding for $50 with a 90% split. And again, most day traders are going to lose, so most people are not going to get funded because most day traders lose. It doesn't matter where they go. But it's a lot cheaper to lose on Topstep than it is to put $5,000 up and lose that, which is much more probable. If you put up thousands of dollars, you're probably going to lose it for your first few day trading accounts. But again, they're a sponsor affiliate of mine, and and with that said, if you only have like $40-$50, I do not think you should do that. I think that you should just save money. Don't waste it trying to day trade. If you only have $50 and you're, if your net worth is $50, do not waste it day trading. But with that said, if you want to check out Topstep and try to get funded in that way, they're one of the most legit in the world. They've been around for 12 plus years. They give you a demo of $50K. If you can make $3K in profit on that demo without losing $2K first and following their rules and conditions, they fund you. If you fail, you only lose what you pay for it. Again, in this case, it's $49. And Topstep X is, like I said, a completely different thing, or a completely new edge in markets, a completely new edge. So you can see on Topstep X, the powerful thing is that I can trade micro contracts, which is much smaller size. And so my risk is much smaller, and I can take these small methodical trades. Like, look at my profit yesterday. I traded a little bit off stream too, right? But like, you can kind of see it roll up here. Like, look, so these are all my trades from yesterday, right? Like, look at this, right? So you can see $10, 50 cents, $5.50, 11, 27, 24, 11, 23.50. Lost $16, lost $12, profited $16, $15, $17.50, lost $7.50, made $3, $6.50, $15, $9.50, $4, and I'm able to build up profits like this because there's no commissions on their platform. It's only 74 cents in fees per trade and no commissions, and so that's a powerful thing. And in the futures market, you can day trade the NASDAQ, the S&P, basically the SPY and Q price action. But again, I'm going to clarify, I do not think you should use this. Who was this? Who was it? What was his name? Leonard. I do not think you should use this. Again, you're probably going to lose your money regardless of how you try to day trade. I wouldn't lose it, Leonard. But if you're comfortable financially and you want to try day trading with limited risk, the best part is that it's only $49. You could try it. But again, Leonard, I wouldn't do it if I were you. But if you want to check it out, they're an affiliate of mine. They pay me money. I'm biased, but a great company nonetheless. Yeah, Jensen Huang saved the market yesterday. He really did. Yeah, I'm trying to read. So I used all stocks. Well, $30. No. And I wouldn't use it. If it's your only $30, I just wouldn't use it. I would save it. I get it. Every day trader thinks they're going to be some prodigy savant. Okay? Most of the time, the person is just trying to justify gambling. I'm looking at shorting Abercrombie. I think it is probably a good short. Honestly, personally, I think A&F is one of the best opportunities in shorting that I've seen in years. I think A&F eventually will fail. I think they eventually will fail. And I couldn't imagine that they hold even 50% of these gains. I couldn't imagine they hold. I would be shocked if over the next 10 years, Abercrombie and Fitch is over $60 a share, $70 a share. Why? Because nobody ever shops at Abercrombie and Fitch. If you look at the mall, nobody is ever there. Honestly, the clothes that they sell, I don't know how anybody would even justify like wearing some of these clothes. Like I went to the men's section and it's like fishnet see-through long sleeve shirts. Like who's wearing this? I'm not personally. I'm not judging. Whatever floats your boat. It's all good. I'm not judging you if you wear Abercrombie clothes. But the people that are going to be willing to wear some of this stuff is very, very small percentage of people. Nobody's ever in the stores. They've got to be losing money. And maybe I'm wrong here. I could certainly be wrong. But they've been squeezed up to crazy, obscene levels. They're losing revenue. They're not losing... let me see. Let me check their actual numbers here. So here's their revenue. All right, maybe this will prove me wrong. I could be wrong here, guys. Well, their revenue is actually stable, but it's not growing. You know, I guess they are having some growth. Here's the problem, is that, okay, here's Abercrombie and Fitch, right? The problem is that their revenue is not increasing. Like, think about how much inflation has happened over the last 14 years, right? With that, their revenue hasn't increased at all, relative to where it was 14 years ago. But again, I'm honestly shocked they have this much revenue to begin with. Where do they make their money? Like, let me see. Let me do a deep dive into this. Again, I'm going to preface this. I might be wrong. Don't copy me. I'm not an investment professional. I might just be wrong about everything. Let me deep dive into this a little bit more. All right. So they primarily make money through sales of clothing, accessory, and care products targeting younger, fashion-conscious demographic. E-commerce growth has ramped up its online sales, become a major source of revenue. Many retailers are shifting towards digital first, and A&F has been successful in modernizing its e-commerce operations to cater to consumer preferences. It's moved away from its preppy image and pivoted toward more inclusive and modern fashion. It's drawn in a wider customer base. They expanded overseas and international markets, contributed to revenue growth. They streamline operations by closing underperforming stores. They've been praised for improving the quality and relevance of its products. Social media and influencer marketing is something they're doing. So, I don't know, man. I guess maybe I'm just old. Okay, maybe I'm just old. I'm still going to be shocked if Abercrombie & Fitch is around in 10 years. And again, I guess maybe I'm wrong here. I was expecting to see worse revenue. So maybe I'm wrong here. This is certainly one of those instances where I could just be off base. But with that said, get off my lawn. Okay. But yeah. And again, I'm not judging you for whatever you want to wear. I just, I walked into Abercrombie & Fitch, and again, I grew up with Abercrombie & Fitch, right? Like, I wore Abercrombie & Fitch in my preppy years in the early 2000s, and you would walk in, and it would just be techno blaring, smell of cologne, some dudes there without a shirt, you know what I mean? Like, and, again, and you... I would just wear whatever the girls wanted me to wear at the time, right? So whatever the girls liked, I would wear it. If they like pink bunny suits, I'm throwing on a pink bunny suit. And so with that, I wore Abercrombie for a few years. Hollister, I remember wearing Hollister too. Eventually, I just grew up and I started wearing polo clothes. But yeah, point is, Abercrombie's completely changed. They had a documentary that came out about Abercrombie and Fitch and about how it was like not inclusive and kind of toxic. And it probably was, to be fair. A documentary came out on Netflix. It was like 2 years ago. And I think they completely revamped their style. And maybe young people wear them. I don't know. I don't know. Young people in the chat, if you are under 25, is Abercrombie and Fitch a big clothing brand right now for you guys? A genuine question. Maybe I should ask my daughter. Honestly, if they liked fishnets, I'm throwing on fishnets, bro. Don't judge. All right. Their jeans. I like how you consider alternative data for A and F, even though it goes against your original thesis. Yeah, I mean, I gotta be honest. I can't, like, look. People say a lot of different stuff about me. They say, oh, John's a narcissist. He can never be wrong or whatever. Dude, I'm wrong all the time. I make fun of myself because I thought GameStop was a short at $3 4 or 5 years ago. At $3 a share, I thought GameStop was weak. And again, I just got, I ended up profiting on the upside for it and turning into a believer and buying and holding and like being a part of the meme, community. But I was definitely wrong about that, of course. So I'm certainly wrong. Probably people would say I'm probably the top 3 most wrong person in the world right now. But I have no problem making fun of myself if I'm wrong. And again, in this situation, maybe I am wrong. I still kind of believe that it's not going to work out for Abercrombie. I find fashion brands to be incredibly risky to invest in long term. I've known some people that have put all their money in freaking Lululemon. And again, while I have a wife and daughter and they all shop at Lululemon aggressively, again, I probably just on myself and my family's clothes, I probably spent $3,000 in the last couple months just on Lululemon, right? Just on Lululemon in the last like 6 months, So my family loves Lululemon, but I don't like their stock. And I don't like their stock because they got big during the pandemic when fashion was like a leisure wear thing. And over time, that trend is going to change. And I'm wondering what Lululemon looks like afterwards, when leisure wear is not the cool thing anymore. And again, I think investing in it long term is risky. I don't think it's old enough to be a legacy fashion company like Nike, which are a little bit more stable. And so I think there's risks. But I think right now, obviously, they're making tons of money. Nvidia, rip it up right now. Nvidia going up all the way up to 118s. There's the pre-market high right there. I think that's a big level. And we still got over 30 minutes left until the data drops. He'll be wrong about Dollar General, though. No one can touch Dollar General. Dude, Dollar General is going to be out of business in 10 years, bro. 100%. 100%. Dollar. Not 100%. I would give it 98.5%. That Dollar General has failed in the next 10 years. It either fails by basically being done, losing massive amounts of its value. Maybe it's still around, but companies can hold on a lot longer. But ultimately, it will fail. It's very clear that this is going to happen too. Like the problem is that people get nostalgic about companies, and you shouldn't. You shouldn't. You hold on to these companies like, oh, I used to go to Dollar General. Like, listen, my grandmother, rest in peace, passed away 20 years ago. She used to love taking me to the dollar stores and going shopping. I used to love going there with her, right? I have nostalgia for these dollar stores. But you got to call a spade, and Dollar General and Dollar Tree are obviously going to fail long term, right? They're obviously going to fail. They're like Blockbuster. Nobody shops there anymore. Even the ones that are successful are certainly not common. Most of the time, they're going to fail right now. And over time, it's going to get worse and worse and worse. And mail order shipping products and people buying stuff online is going to grow at a greater and greater and greater level. Until Dollar General, Dollar Tree, all these dollar stores, Big Lots. You can look at Big Lots as well. Dollar Tree, Big Lots, Dollar General, they're all failing right now. They all had terrible earnings and terrible reactions to earnings. They're all almost down at least 20 to 25% in the last week. These companies are going to fail, brother. I might be wrong. I don't think I am, but I could be. There's certainly a chance that I'm wrong. I'm not trying to act like I'm not wrong, or it's not possible for me to be wrong here. I could certainly be wrong. I could be wrong about Lululemon, and maybe Lululemon turns it around and does big things. Ultimately, I'm looking at vulnerability. Like, is this a vulnerable investment? And if it is, I'm not really going to touch it, even though I could be right and I could be wrong. Right, 100% digital. And again, Yeah, I remember like Dolce and Gabbana used to be big. Like there were a lot of big companies in fashion that are no longer really used anymore. The best example of this is Michael Kors, right? I remember my wife wanting a purse like a decade ago from Michael Kors, and I went and bought her like a $500 or $600 purse for Michael Kors or whatever, and it was like the big brand. They had a bunch of people in the mall. We had to like wait in line there. This was 10 years ago. Fast forward 10 years, nobody cares about Michael Kors anymore. Michael Kors is going out the, nobody shops there anymore. Nobody buys it anymore. Trends change. Fashion changes. And that is the vulnerabilities in investing in them, because they change. And they change quick relative to a lot of other industries. The trends there change fast. The only ones that are really safe are big legacy brands. Louis Vuitton, Nike, Champions has kind of seen a resurgence, but it was really weak for 20 years too. So, the only ones that are really safe are legacy brands, Polo, and even they fluctuate and trends change there too. So I guess the point is, if I'm trying to bet money on something long term, it needs to be a sure thing. There's a lot of sure things long term, like S&P 500, NASDAQ, gold. If you really want to talk about sure things, bonds. I think Apple's pretty stable and pretty safe long term. Microsoft is as well, obviously. So there's a lot of much better investments than these really trend-based fashion brands and retailers. Dollar General is located in rural areas, 100%. But what's going to happen is that over time, more Walmarts are going to be, more stores are going to sprout up, like big stores are going to sprout up in those rural areas. Mail order shipping is going to get more and more efficient over time, not less efficient as well. And generally, a lot of the customers that shop at Dollar General and Dollar Tree are the older people, right? They're older people. They're probably all over 50, 60 who are used to going there, right? But as they get older and older and new generations sprout up, less and less people are going to go there. More and more people are going to buy online. Stores are going to open up. It's just not going to be good for those stores. And again, I think people hold on for like nostalgia. Like, oh, it's nostalgic. They just want to hold on to how it used to be, which is human nature. But I think in stocks, you gotta be as objective as you can. Nobody's 100% objective, but you gotta try. Hey, what's up, Beach Bum? Hey, thanks, brother. Appreciate it. What's the bias on gold? Gold short term is risky, I think, to buy right now. It might go up, but gold can downtrend for years. And usually, like if you look at the actual history of it, here's a yearly chart. Gold will typically go up really big, and then it can downtrend for years. Go up really big, downtrend for years. Go up really big, downtrend for years. Now it's gone up really big. Right? And so the question is, what's the next step in this pattern? To me, I think it's possible, and I'm not saying it's going to happen, but to me, it's possible that gold starts to downtrend for years right now. And again, to be honest, that's the time you want to start DCAing into it, is after it's pulled back heavy. But again, short term, very risky for gold anywhere, regardless of whether it's lows or highs. You never know what gold's going to do short term. Long term, stable. One of the best inflation hedges long term. Gold has 7 or 8x'd in the last 20 years. So gold's done really well. It's beat the S&P 500. But short term, it's risky. It's been breaking highs over and over again all year and all last year as well. So I mean, it's up 25% or so in the last 52 weeks. And so I don't know if that's the best time to buy it personally, but I might be wrong, and it could continue up. It definitely could. Like, you can see how long this trend was. Like, this trend with gold, this upward trend on gold lasted from 1995 to 2010, basically. So, yeah, that's 15-year uptrend for gold. So it can go up a long time as well. But, I don't know if the risks outweigh the reward there. I was never a big club goer. Like, honestly, I have like anxiety when I get around a lot of people. The irony is that I'm around 700 people right now. I just can't see you guys. But I never liked going out like that. I was never somebody that went to the clubs. My anxiety is too high for that. I can't dance. I get nervous around a lot of people. And yeah, I'm not a big drinker, you know. And so those things, three things combined, made it so that I never liked going to the clubs. I would always go and like pretend like I was enjoying it, but I never did. I always hated it. Again, I'm just not a big drinker. I went to dance and burn calories. That's the place to do it. All right, so Nvidia is still holding here. Look at that big downward push, retracement, and then a move right back up. We still got 30 minutes plus, guys. 30 minutes plus. Is a wife a bad return on investment? Depends on the wife. Depends on the wife. You know, coming from somebody who's got, like, Carol's one of my top 3 favorite wives in the world, you know. Nah, Carol's a good wife. She's a good wife. But yeah, it depends on the wife. You sound like me. I'm uncomfortable around a lot of people. I've just got, like, I know it's hard to explain. Like, I can be very extroverted, but I don't like it, you know. So I could be extroverted, but I don't necessarily like being around a lot of people. But if I am, I can be extroverted. But usually I choose not to be around a lot of people, you know. So it's hard to explain. Like, I'm really an introvert in nature. If I had my preference, I would stay home, and I'm kind of a homebody. But I can also be extroverted too. I'm somewhere in the middle. Do you like fishing? Yeah, I like bass fishing. You know. I'm 62. Are you calling me old? No. You're 62 years young, brother. You're around 760 people right now. I know. Listen, like I said, the big irony here is that I don't like being around a lot of people. And I am around, you know, in 25 minutes we'll be around about 2,000 to 3,000 people here live. So again, the big irony in that. But again, I can't see you guys, so y'all don't really exist to me. Y'all are just internet people, internet friends. You know, if I was in front of almost 800 real people, dude, I wouldn't be able to talk. I was one of those guys that I would give reports in front of the class, and I would just speed read through the entire thing. You're naturally an introvert, selfishly an extrovert, if it benefits you. I mean, I don't know if it's selfish. Honestly, you guys should probably appreciate that I'm subjecting myself to lots of people. I would have no clue what to say, and I'm an extrovert. Yeah, I mean, again, 800 people is a different thing. Trying to visualize crowd sizes. 50 people, 100, 200. Yeah. So the equivalent of 1,000 people. So this is the equivalent. So like today when PPI drops, we'll have like 2 to 3 people here. This is 3,000 people. Whew, I get nervous even just looking at it. Definitely top 3 least selfish people in the world right now. Give away $1,000 to the top 3 trader ideas of the day. I want to help people, right? Like I do. I want to help people. I try to be nice to people. Again, we try to get what we put out there. So, yeah, that's 3,000 people. Whew. I get nervous just looking at it. Did gold break lifetime highs today? Or was this yesterday? Oh, so yesterday gold broke lifetime highs, I think. Let me see. Or no, I'm sorry. That was a monthly chart. Okay, yeah, so gold broke lifetime highs 20 days ago. Yeah, streaming's difficult when you start out. A lot of people think it's easier than it is, right? Like, I've had a lot of people that have worked with me. They see me doing what I'm doing, but deep down, they really just kind of want to do it themselves. Like, and so I've had people work with me and do it, and then they try to do it themselves, right? And they go from me having, thousands, hundreds to thousands of people in my live streams. Then they try to create their own channel and compete directly with me. I've had a lot of people do this exact thing, right? And then they start streaming, and they get one person watching their streams. And so it's really easy to look and be like, I could do what this guy's doing. I want to do it. But it's difficult to build the audience. It's not easy, and it takes years. So like me building this audience took years, and I'm finally reaping the benefits of it now. But it wasn't easy. It took a lot of dedication towards something that wasn't paying me much to start. And yeah, it's a hard thing. You're a good teacher? I try. Top 3, they would say. Imagine 3,000 people looking bad at you or laughing at you. Ha 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 ha. That's like everybody's fear. No reason to be nervous when they all love you. Well, hey, thank you, Tidy. Gotta head out as my phone is, all good. Hope you have a great day. What's your view on gold if PPI drops? If PPI goes down? I don't know. You got a couple different theories you can make. If inflation is better, meaning lower, right, it could mean less of a need to hedge with gold. Gold's an inflation hedge. So, but if inflation is hot, if PPI is higher, people might hedge with gold and gravitate towards gold. And so either one of them's generally gold moves in a macro sense with markets, right? So gold will generally move in a macro sense with markets, but there are certain situations where it doesn't. So it's tricky. Can you show us global liquidity and give us an insight? Thanks, John. Appreciate it. Hey, thank you so much. Yeah, appreciate it. My top 3 morning coffee bro reporters. Yeah, I don't know if somebody's like trying to send fake viewers to me or what. It says we got 3,000 people here, but somebody's trying to mess with me. Again, luckily though, YouTube does a pretty good job of like weeding through it and seeing when they're not real, and so it doesn't really affect the channel. So whoever's doing it's just kind of wasting time. But we appreciate the real people that are actually here. Hey, thanks Lolo. I appreciate it. Thanks so much. It's probably whoever I banned this morning that was talking smack. Again, that dude, it's obviously the same guy. Whoever it is, man, they've just got to be really in their head. Yeah, like I could see. Yeah, so they're not even registering for YouTube. Yeah, I believe some of you guys are real. CNBC talking about you this morning. Yeah, I wish. I have massive social. Yeah, you're kind of real. You're real-ish. Hey, what's up, Lee? Hey, thanks, brother. I appreciate it. All right, guys. Again, PPI inflation data dropping at about 20 minutes or so. 20 minutes. Do you think JOLTS or PPI is more important today? We don't have the JOLTS report today. The JOLTS report's not today. The JOLTS report was last week, I believe. Right? Let me make sure. I'm pretty sure the JOLTS report was last week, not this week. Yeah, last week we had JOLTS report on Wednesday, September 4th. So not this week. It was last week for the JOLTS report. JOLTS report showed up at 78.8 billion, lower than I'm sorry. JOLTS report showed lower than expected, so less jobs. Are we real? Yeah, you're real-ish. You know, Mahogany John, hey, the GOAT. All right, guys. Tesla at 227. Honestly, the whole market's up pretty big. You know. Yeah. Yeah, the recovery from yesterday, again, Jensen Huang yesterday. Yeah, so Tesla 227s. All right, guys, we got 16 minutes until PPI inflation data drops. 16 minutes. I can imagine, John, you're doing a good job. That's why everybody keeps coming back to you. Hey, we try. Honestly, we've gotten the last 3 CPI reports exactly right. Literally exactly right. And I don't know how I've done it. I've probably gotten 80% of CPI reports right in the last year or so. Maybe less than that, but somehow I've been getting them exactly right, and it's weirding me out. I'm kind of freaked out by it. But yeah, Nvidia CEO yesterday, if you want to know why the market ran, yesterday, again, Jensen Huang, Nvidia CEO, said, quote, and so remember, we tried to cover this conference yesterday, and it booted me out of it for whatever reason, but he said, quote, our company works with every AI company in the world today. We're working with every data center in the world. I don't know one data center, one cloud service provider, one computer maker we're not working with, and we have a lot of people on our shoulders, and everybody's counting on us. Demand is so great that delivery of our components and our technology and software is really emotional for people, end quote, Jensen Huang. Right, and this is why you can kind of look at the market. The market was actually falling pretty drastically yesterday at the opening bell. The whole market was weak. So the market was very weak yesterday. You can see at the opening bell, it went up. Nvidia was at 112s, but it dipped all the way down to 107.50. And so it got really, really weak. And then Jensen Huang came out at the Communicopia Goldman Sachs conference and said those things that I just quoted. And you can kind of see Nvidia completely turned, went straight up. Now it's almost to 120. And it's consolidating higher ahead of PPI inflation data. Now remember, PPI inflation data today is the other side of the inflation token. We have CPI inflation, the consumer price index, and we have PPI inflation, the producer price index. So CPI is consumer inflation, PPI is business or wholesale inflation. And so CPI is the more relevant one, the more watched one retail-wise, but PPI is still pretty important, pretty relevant, and it's something you want to watch. I like your channel, you're chill, you do an excellent job. Hey, thanks, man, appreciate it. Oh yeah, the ECB decision just happened. I'm sorry, guys, the ECB decision just happened, and they cut rates 25 basis points to 3.5% as expected. The refi cut to 3.65% as expected, so they did a 25 basis point cut. Deposit rate, 25 basis point cut as expected. The market hasn't really moved because the ECB, the European Central Bank, is just not going to move markets in that way. Their decision, while ours is somewhat relevant to them and theirs is somewhat relevant to us, it's not going to move markets like our rate decision, at least. And so again, you can kind of see right here, Deposit rate was cut to 25 basis points. Refi cut to 3.65. Yeah, it's just kind of strange. PPI inflation data. Hey, y'all hit that subscribe button if you haven't already. Hit the notification bell, chat. We appreciate it. All right, we're at 118s for Nvidia. SPY still moving up. It's 556, guys. 556. Again, the deposit rate was cut 25 basis points, 3.5% as expected. The refi rate for ECB was 3.65% as expected. They're not pre-committing to a particular rate path as of yet, and they have their staff projections for inflation at 2.5% for 24, 2.2% for 25, 1.9% for 2026. HICP core inflation is expected for 24 at 2.9%. 2025 is at 2.3% expected, and this is European Central Bank HICP core inflation expectations. GDP expected at 0.8% for this year. 25 expected at 1.3%, and 26 expected at 1.5%. So those are the expected numbers here. Again, hit the subscribe button, guys. We almost got 146K. I use ChatGPT 4.0 a ton. Yeah, so Faye Jensen said a lot of stuff yesterday that benefited the market. And again, the ECB cut rates as expected, 25 basis points is what happened. All right, so that is essentially what happened. 25 basis point rate cut for Jensen. Or not for Jensen, for the ECB. And yeah. Yeah, again, we're actually going to be trading futures today at the opening bell too. So again, the good thing about Topstep X, if you want to day trade, almost all day traders lose money. I say this every day. It's really important for people to understand. Almost all day traders lose money. Remember, we're not investment professionals. We're not liable if you lose money. We do trade off stream. Understand CFTC 4.41. I do have affiliates and sponsors, but almost all day traders lose money. And so if you put up $5,000 for your first account trying to day trade it, you're probably going to lose it. Let's just be honest here. That's just the truth. Instead, trying a funded account program like Topstep is a much better option in my opinion, but I'm biased. They pay me money. But what Topstep does is they give you a demo. A 50K demo is the base one. If you can make 3K in that without losing 2K, following their rules and conditions, they fund you 50K with a 90% split. So your split is similar to putting the money up yourself, but if you lose, that subscription is only $49 a month. So you're literally risking $50. And it's not the end of the world if you lose it. You still have some risk. You still have to learn how to trade under pressure and all that good stuff. But the risk is noticeably less. On Topstep X, you can also trade with no commissions. So I can get into these small little scalps, $4, $10, $15, $6.50, $3, 74 cents in fees per trade. Very cheap. Really allows you to let your edge play out and grow small profits. But again, they're a sponsor of mine. They pay me money. I'm biased. It really is one of the best edges in funding, in my opinion. And again, they pay me money, so I'm biased. But if you want to check them out, here's the link. Great way to help support the channel here. I appreciate the love. Thanks so much, guys. And here, my family's here in the room, so I'll be right back. All right, I love you, buddy. Have a good day, dude. Love you guys. All right, love you. Have a good day, guys. All right. All right. Catching back up with the chat. Yeah, nobody knows if the market's bullish or bearish right now. Market's up a little bit today, but please don't spam, sir. Well, you can predict the market. Certainly long term, the market's incredibly predictable. There's also some stuff that you can predict short term. Again, like one of the examples I always try to use here so people can really recognize it is you can find weak stocks that have a very high probability of failing. Okay, I've done this multiple different times. I gave these examples the other day, but I use these examples because they're really good at helping people understand how you can find like an edge, right? There's a lot of edge that you can find in markets on the short side, right? But you're not like betting against the strongest companies in the world or betting against the S&P or the NASDAQ or the Dow or even the Russell is incredibly risky, right? These are the strongest indexes in the world, the strongest markets in the world. Betting against that's dumb, right? It's not it's a sucker's bet. You know, you want to be Michael Burry, great, but Michael Burry's been wrong, I would say 90% of the time about crashes, recessions, everything. He got 2008 right though. And so he has a much bigger net worth than me. And so what do I know? But what I'm saying is there's stocks that you can short that you can find an edge in. Good examples of this, Dish on Demand, right? These are a couple stocks that I've been very bearish on for years and that have since fallen 80% plus. Dish on Demand is now bankrupt. It's no longer even a public company and it's bankrupt. Dish on Demand was a satellite TV company where you would get satellite TV from Dish, right? They would slap a satellite dish on your house. The streaming market like Netflix, Amazon Prime, Fubo, Hulu, you know, these have all taken over. HBO Max, they've all taken over. YouTube TV, they've all taken over TV. You don't need to slap a satellite dish on your house anymore. And those businesses are going to fail. Recently went bankrupt, but I was talking about this weakness for years. Peloton got really big during the pandemic. It's freaking virtual reality bicycles. Like this company was obviously going to fail, and it pumping up to $171 a share is obscenely high priced. It was never going to hold these gains, got really big, started wasting money on virtual reality rowing machines and just things that nobody would ever use, highly predictable. Very easy to predict this failure. In 2021, this thing was at $170 a share, and I was saying this back then, super sketchy, almost never going to succeed. One that I personally think is weak, and I've been saying this for years as well, is Roku. Right? Why do I think Roku is weak? Because Roku went from a hardware company where, you know, you needed the Roku sticks and all this stuff. And then everything changed and pivoted to more software based. It pivoted to more of like a software based company. So it pivoted to more software. Hey, baby, I got big economic data today. Okay, I'll text it to you. All right, love you. Do you have an actual? No, here, I'll confirm with him, but I'll text it to you. All right, love you. But yeah, Roku went from a hardware company to a software company, basically. They went from producing hardware to mostly software. And the problem with software is that it's very easy for their competitors like Samsung, Sony, whomever, to create essentially replications of their software. Very cheap to do so. And so why would they allow Roku to gather that data? They can just do it themselves, get the data themselves, cut out Roku as a middleman. And that's bad news for Roku, because over time that means that we're going to have less and less of a need for Roku in general because of the software-based everything. These TV companies are going to start producing these things in-house. You're not going to need it. And so again, I've been saying this for years, and since then Roku has fallen from $500 a share down to $70. Massive percentage drops. Companies like Beyond Meat, BYND, lab grown fake meat. You know, vegans aren't going to touch this stuff. It's too weird. You know, it's too new. Vegans are health conscious. They're not going to mess with it. So my point is, there's companies that are super identifiable in this regard. They're almost never blue chip companies. They're almost always mid caps that have gotten really overhyped short term. Mid cap stocks, the problem when going long on mid cap stocks as well, is that a lot of people invest their life savings into crappy mid-cap companies that are only up over the last few years, right? And what happens is like these companies are so new, they're so overhyped, but people invest in them like they're Apple or Walmart, but they're not Apple or Walmart. They're really new companies. And so what happens is they put all this money in them, and then they end up losing 50-60% of their investment in speculative mid-cap companies that are super easy to identify weakness in. And then people end up saying, oh, the market's rigged, and they just give up. When really they're putting their money in the wrong things, right? And they're betting against the wrong things as well. You try to short Apple or Amazon or any blue chip stock, it's risky. And so I say this a lot, but it's important for people to understand. Like, you get a lot of other people saying all this other stuff. That's the big edge if you want to short, you know. And really, that's kind of what companies like Hindenburg do. I disagree with them where they short Supermicro Semiconductors and did their whole short report on them. But yeah. But Supermicro Semiconductors was risky, like inherently risky. Super low float, up ridiculously large percentages. Not an old company, pretty new company, not a legacy company. And so being up that much of a percentage that short term was risky anyway. And I told somebody this before the massive drops in Supermicro. About a week before that, somebody asked me about it, and I told them the same thing. All right, guys, we got PPI inflation data dropping in about 2.5 minutes. 2.5 minutes. Hey, thank you, G. Appreciate it, brother. All right. See, there we go. There's the viewership corrected here. Yeah, so there's the viewership corrected. Again, it was just weird. I don't know if it's like YouTube itself or what that was, but there we go. That's more accurate. Yeah, we got 2,000 people here. Yeah, I don't know what was going on there. It was just strange. I could see the views, like, I don't know if it's just YouTube's glitchiness or what, but I could see it. All right, guys. Anyways, we got almost 2,000 people here watching. We got 2 minutes left. Jobless claims unemployment drops today as well. That's how many people are filing for unemployment week to week. So jobless claims unemployment dropping today as well. They're expected at, again, jobless claims expected at 227. The higher it is, the more people filing for unemployment. The lower it is, the less people filing for unemployment. All right, guys, hit the live button next to the play button. This data's about to drop. This timer's actually a little bit off here. So the timer's a little bit off. We actually got 1 minute exactly left right now. What's the market fearing, bro? Inflation or recession? I think the market always fears inflation. I don't know if we've pivoted to complete recession fearing market, but it's close, right? It's close up there. All right, guys, here we go. All right, guys, here we go. 25 seconds left, 25 seconds. We got about 2,200, 2,300 people here. ECB cut 25 basis point. 20 seconds, guys, 20 seconds. All right, here we go. Here's the PPI report. 10 seconds, guys, 10 seconds. All right, and there's the report right there. PPI showed up at 0.2% higher than expected year over year, at 1.7% lower than expected year over year. Jobless claims showed up higher than expected, signaling more people filing for unemployment. And again, PPI data showed up at 0.2% versus 0.1% expected, higher than expected month to month, which is the most important one. Jobless claims showed higher than expected, more people filing for unemployment. So essentially, we got higher unemployment numbers here and higher inflation numbers than expected month to month, right? So this is the month to month reading. Year over year, PPI actually decreased a little bit month to month. And so a very underwhelming reaction for PPI here. Very underwhelming reaction. We got almost 2,500 live viewers. Market's down a little bit, but again, 0.2% expected, or 0.1% was expected. We showed up at 0.2%. So slightly higher month to month reading for PPI inflation data, slightly higher month to month, but slightly lower year to year reading here. I would say this is mostly negative. I don't know if this is necessarily what I would say good, but I don't think it's necessarily bad either. So what do you guys think? Is this good or bad for markets here? I'm going to put it up on screen here, guys. So again, PPI showed up at 0.2%. month to month. Jobless claims showed 230K versus 227K expected. PPI year over year showed 1.7% versus 1.8% expected. So yeah, that's basically it. That's the data right there. Market is down slightly on this report, slightly down on this report. Yeah, I mean, I showed. So again, somebody saying on Trading Economics the expected number for jobless claims was 230. Sure, I mean they're gonna have different analyst expectations. It all varies depending on the analyst, right? I'm showing 220, or I'm showing 227 is what was expected. Last time it was 228. Jobless claims again 230 versus 227. You can see it on big bold letters right here. And again, guys, if you haven't already, we're going to day trade futures today. Day trade futures. You can kind of see my profit from yesterday. We built up these nice little gains here. Nice little gains. And the huge edge with Topstep is that I can day trade with no PDT rule. And really like grind up. Like look at these little gains that I can make here. Like these little bitty gains that I can make. 10.50, 50 cents, 5.50, 11, 27, 24, 11, 23.50, lost 16, lost 12, $16 gains, 15, 17.50, 3, 6.50, 15, 9, 50, $4. So again, you can see out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Out of the last 20 trades, I only lost 1, 2, 3, 4 times out of the last 20. So 4 times out of the last 20. So that is 80% accuracy. 80% accuracy that I've had. And again, this is a huge edge. On Topstep X, there's no commissions. And look at the NASDAQ start to break down here. So this is basically the same price action as the QQQ, and I can day trade it in futures, no PDT rule. They give me a demo. They test my skill with the demo, but this is a 50K funded account, so I can build up profit. I have a 90% split, and if you want to take advantage of this, it's only $50, $49 for the base one. They give it for the challenge, right? It's a challenge. You have to pass the testing that they give you first. The base one, they give you a 50K demo, you got to make 3K without losing 2K and following their rules and conditions. So it's a reasonable 2-to-3 ratio. If you do that, they fund you 50K, 90% split. So it's similar to putting the money up yourself in that regard. And you can take that funded account and withdraw and fund your own account if you're good enough to build up some profit enough to withdraw. And again, most day traders lose though. So your risk here is only $49 a month. It teaches you how to trade under pressure. It's a great middle ground of pressure where you're not risking $5,000 or more like most new day traders end up losing. I lost $4,000 in the first couple weeks of my trading. So you still have some risk, but it's not the maximum risk that you take when you're trying to learn day trading. And in the futures market, again, you can day trade. There's no PDT rule. I can day trade the S&P, the NASDAQ, basically the SPY and Q price action, gold, some currencies on Topstep as well. And so again, they are an affiliate of mine. They pay me money, but I really genuinely think it's the best option for new traders if you want to learn to day trade. You can check them out right there. There's the link. And look at the markets coming down. So we're going to start day trading this. I'm going to buy this up with one contract here. I'll probably add to it. And again, the big edge on Topstep X is that there's no commissions. There's only a small amount of fees. All right, so we're up about $15. So we just made about $15 on that little bitty trade buying this dip on the NASDAQ here. And again, we'll see if we continue. We'll see if we continue. So there is trade copiers, I'm pretty sure, Isaac, on Topstep. So we're back down to this bottom level. I'm going to buy this dip again. It's kind of a volatile time to do it, but I'm okay with it. See if we can build up a little cushion during the day. See if we can retrace back up some. We already bought this dip, and I will add another contract to it. We got a little cushion on the day already. There we go. I'm going to add to this now. Oof. Now I'm down a little bit. I don't know what I want to do with the rest. I could add more to it, or I could just cut it down 26. We're kind of close to the bottom of the range here. All right, I'm going to add one more position to this. 3 contracts here, but I'm going to get ready to exit if I need to. I think I'm betting on basically a stabilization here at the bottom, but I have to be very weary of it, continuing. right, now we're flat on the position. All right, so I'm gonna take half off there, take a little bit more off there. All right, so we ended up making money here. We ended up making about $20. So we made about $30 of those last two trades. And we did find a bottom there, which is what I was betting on. But again, this is the beautiful thing about Topstep X is that my fees here are 74 cents. 74 cents. And so again, if you want to check it out, link is in chat. You can also find the link in the description, I think. Let me make sure it's there. Yeah, so it's there. You can also find the link in the description. Shouldn't he hold longer? I mean, yeah, I mean, it doesn't matter. I shouldn't do anything. I just try to trade with whatever my edge is. And my edge is usually like, you know, small size scalping. But taking a lot of trades, but with very small size. And if I would have held longer, look what happened here. So again, here's the QQQ. It's basically what the NASDAQ and the futures market tracks, right? If I would have held longer, look what happened. We completely came back down here. So I would have lost money if I would have held it longer. Well, it increases the accuracy. So again, I say this every day. But the things I repeat, like you hear me repeat stuff a lot. I do it because I think it's important for people to hear it. Right? I think it's important for people to understand. The longer you hold a position, the less accurate you generally are. Right? Depending on the strategy. But, you know, risk reward and accuracy rates have a negative correlation. So the better your risk reward is, generally the worse your accuracy is. But again, you got a lot of gurus that don't really understand. You got a lot of, you know, 20-year-old like kids with braces trying to act like they're stock market experts when they're not. And they're telling people they're trying to sell courses, right? So they tell people they've got like a 5-to-1 reward to risk ratio and like a 90% accuracy rate. And that's total nonsense. Fugazi nonsense. Like nobody has that. Nobody's doing that. You know, to get an accuracy rate like that, I have bad risk reward. My risk reward is 1-to-1 or worse a lot of the time. I just bought this dip, by the way. But yeah, my accuracy rate's much worse than, or my accuracy rate's usually pretty good. But my risk and reward ratio is not good. Because again, you're not going to be able to have both. And people think it sounds good, so they repeat it when they're trying to sell courses. Like, oh, I got a 5-to-1 reward to risk and a 95% accuracy, guys. Cough, buy my course. You know, but usually they're full of it, to be honest. Again, we're up hundreds on this account so far. We're trying to build up profits slowly as we're trying to. We're already funded, and I think once you got funded, you got to slow it down, and build up a really good cushion first, which is what I'm trying to do. And then once I have a good cushion on the day, then I can increase my risk. We'll add to it too. So we got a little cushion on the day. There we go. Take a little piece off there. Take another little piece off. So we get a little bit more out there from this. There we go. All right, so just made another like 20-30 bucks, I think. So far on the day, we're up a decent little amount. Yeah, we're up like 50 bucks. Nice little cushion so far. We're going to keep trying to grind it up. There's the Q bouncing right back. Gold's pumping up in all this stuff with inflation data, even though inflation data was kind of neutral. I thought the Saints played today. I thought they had Thursday night football. No, it's Sunday, sorry. For whatever reason, I thought they were doing Sunday night football. Or Thursday night football. Oh, well. So we got Dak versus Derek. I don't know. I'm a Saints fan, so I hope the Saints win. But I like Dak as well. You know. No, it's only futures, Johan. So it's only futures. Does anybody care about PPI? I mean, we had thousands here when it dropped, so some people care about it for sure. Yeah, Jerome Powell's very balanced. I missed the numbers drop. What's the summary? PPI showed 0.2% month-to-month increase. Jobless claims showed 230K versus 227K expected. PPI year-over-year showed 1.7 versus 1.8%. Yeah, but what NFL games today? Oh, we got the Bills versus Miami. Do the Bills still have Josh Allen? I haven't been following it that much. Yeah. Is the market reacting to PPI or jobless claims? PPI. I mean, probably a little bit of both, right? But jobless claims is a week-to-week filing report. So jobless claims drops weekly. Meanwhile, jobless claims drops once a week, right? So it's not the most influential report, I guess is the point. Getting sick and tired of the back and forth data. I mean, data's data. In the end, like I said, some people might like the data, some people might dislike the data, but in the end, it's just data. Don't you say it, Zane? How dare you? Don't you talk about my Saints like that, brother. No, I'm just joking, man. It's all good. Yeah, like I said, I hope the Saints win. But I'm old enough to remember when the Saints were the Aints. As well as when the Saints were the Saints. They did well. They've kind of been the Aints for the last few years, though. I like to see the SPY retest 551. Yeah, the Q's bouncing all the way back. This is why I always tell people. Like, the edge is so obvious sometimes, man. It's so obvious. Like, listen. People make trading so incredibly difficult for no reason. Trading's very simple. Most of the time, right? Most of the time when you have a big pullback like this, big is relative, right? Relative to other PPI reports, this is a small pullback. But in general, when you have a decent pullback like this, buying as we continue to test lows eventually, like after this happens enough times, buying on the test of lows again is usually going to be a pretty accurate thing, because almost always we're at least going to go like that, right? Like maybe we do this and we keep on keeping on down, right? That's certainly possible. But a lot of the time we're going to go like this, you know? And again, now we're around the volume weighted average price in 200 EMA. So we might come back down. We might continue back higher. I don't know. But I think just a really simple strategy is playing extension. The biggest edge that I see technicals wise, you get a lot of technical wizards that like all these different bull flags, crossovers, all this stuff. The biggest edge I see is just simple extension. So just simple extension. So like an example of this is if CPI data shows up relatively neutral and the market drops a big percentage, usually it's not going to hold down because the data wasn't really bad, you know? And vice versa. If the data was slightly negative and the market pumps up really big, usually it's not going to hold. It's going to come back down some. And so you can play off of that edge and really just attack ranges. And that's one of the easiest things for me to do. Look at Nvidia right here. So Nvidia moves the market, right? So you could theorize that, hey, Nvidia is at the bottom of this range, right around the previous closing price, right around where we bounced previously, and say, okay, well, Nvidia is right around here, you know? Why don't I buy the S&P or the NASDAQ? And you're going to usually get a pretty high edge likelihood of a bounce. Look at gold pumping up. Gold's getting ready to break lifetime highs up there. Let's see if it does. Lifetime highs are what, 2570, I think? Yeah, 2570.40. Gold's not there yet. 2570 is the lifetime high. So gold's still got a ways. This light green line is the gold all-time high. But it's getting there. Yeah, well, obviously, more buyers than sellers. But again, that's making something much more complex than that simplified. You could use that example for anything. You know, why is the economy heating up? There's more buyers than sellers. Why are prices going up? There's more buyers than sellers. You know, why are, everything. Why is unemployment going up? There's more people have less jobs. So I don't know. I think it's more complex than just more buyers than seller. Really, it's a real look at mass psychology is what it is. One thing the movie Limitless got right. In the movie Limitless, there's a quote, the stock market is just about mass psychology. And that's exactly right. It's just about mass psychology. And so the psychology of what I just said here, looking at like the psychological aspect of it, is when we start to go down here, what happens? More people find it to be cheaper is what happens. And so more people are willing to buy it as it decreases. And so they buy it up, which makes it what? Bounce back. Short term. Long term, anything can happen. But that's what the short term logic of that is. More TikTokers. Yeah, I mean, more people have less jobs, obviously, isn't sensical. But that's kind of the point. It was like I was just kind of simplifying it, oversimplifying it. What is the Russell going to break out? It's been breaking out. More people join the labor force. Yeah. I think we ran up so much yesterday, they're going to drop it at the open and then probably run it around 10 a.m. Yeah, I mean, that sounds like the same thing I was saying last week. Because that's a very similar thing where we dip at the opening bell and then rebound in the second half of the day. And that's something that, if you guys remember last week, somebody was like, hey, what's the market going to do? And that's literally verbatim what I told them. I said, hey, the market went down big and then bounced, and so my likelihood is that my thesis is that it's going to drop at the opening bell and then rebound, midday, and so that's very common. Hey, y'all hit that subscribe button. I don't think I put it in sub-only mode, did I? I don't think I did. Hit the subscribe button, guys. Do it now. We're basically at 146,000 subscribers. I appreciate the love, guys. Do it now. Subscribe. Hit the notification bell. Thanks so much. Hey, good luck, Long. I hope you make some money, brother. Gold, pump it up, though, guys. Let's see if gold breaks lifetime highs. Nvidia and the Q are kind of flat right now. I'll give you guys my other favorite edge that I've been playing. My favorite edge that I've been playing, and I'm going to use this ahead of the FOMC meeting next week for sure. My favorite edge I've been playing in markets over the last, year. It's very simple. Is that, again, I've gone over it many times. I'm going to go over it again. My favorite edge is... typically, traders like to trade kind of gambly stuff like breakouts, momentum, something that's super exciting, and everybody's super excited, and they're trying to ride these big breakouts and the momentum and the craziness. And I think that's what attracted a lot of gamblers to the stock market anyway. But I think a much more probable thing, a much more edge-driven thing, is ahead of big economic reports like the FOMC meeting, we get what? We get choppy behavior. Look at Nvidia right now. So ahead of the FOMC meeting, the likelihood that the market is going to go like this is very, very, very high, right? Very, very, very high. So you can say, let's just draw a range. Let me change the color of this. Oh, that's bad. The likelihood that the market's going to go like that is very, very, very high. I would say in the 24 hours leading up to the Federal Reserve rate decision on Wednesday of next week, the likelihood that the market's going to go like this, the S&P, the NASDAQ, is very, very, very high. And so it's a patient strategy. You have to be patient. But if you can wait for this, What's the logical way to attack this? Honestly, it's been very simple. I just buy the bottom of the range. I buy the bottom of the range. I can even sell at the top, short the top, whatever I want to do if I'm day trading here. This is a day trading strategy because sideways choppy behavior is very, very common. And so waiting for something to go up really big ahead of this report and just shorting those tops is a very easy strategy, and I've been using it a ton. And honestly, I think it works really well. Really, really well. And it's kind of the opposite of convention. Like conventionally in day trading, everybody's trying to ride big breakouts. But I think it's a much more statistically probable thing for the market to move sideways. Maybe not statistically. Maybe that's the wrong word. Sorry. It's a much more probable movement pattern, behavior pattern in the market in the 24 hours leading up to big economic reports like FOMC meetings, CPI, stuff like that. And so it's much more probable that we're going to chop sideways, and so you can attack that chop. And it's not the most exciting strategy, but I think it has a super high edge. And I might be wrong. Maybe the market goes down, up, breakout. I don't know. Not an investment professional. I'm not liable. If you lose, always make your own assessment, trade responsibly. Honestly, I'm still going to toot my own horn about CPI, dude. I've gotten the last 3 CPI reports exactly right. You can watch the streams. Watch the last 3 CPI streams. Listen to me about an hour before the CPI report comes out. And I predicted the last 3 correct. I'm just in flow with the universe, guys. Yeah, brought to you by that dips. Maybe just strong coffee. Yeah. Cheers to you. What's the range? Well, the range you got to identify first. It's very simple. Here's the Q, right? Here's a good example. Where's the range on the Q chart right now? Range is pretty simple. Here's a top, here's a top, here's a top, here's a bottom, bottom. So what's the range here? The range is this. Pretty simple range, right? Same thing. You can see right there. You just got to kind of watch for it. You got to analyze it and see it. Gold is squeezing. Yeah, gold's trying to get up there. It's at 2560s. Again, stick around, guys. We are going to day trade live at the opening bell today. Day trade live at the open. Be ready. Hey, thank you, Ed. Cheers on CPI. The game is never easy, so you need to celebrate any wins you get. Hey, thank you, sir. 100%. Honestly, though, anybody that watches CPI knows that it's not easy to predict what CPI is going to be, right? It really isn't. And again, I started trying to predict it because, like, what happened over the last year, I cover every CPI report. And so naturally, when I cover the CPI, everybody's always like, hey, John, what do you think CPI is going to show up as, right? And over the last year straight, I got it right a couple times, and again, getting it right a couple times made me start trying to predict it and putting my prediction out there publicly so people could see that I did it before it actually came out. And so once I started to do that, again, I started to get everyone right, mostly. Not everyone. I think I've been wrong about a couple. But I think I've gotten most of them right over the last 6 months. And again, the chat can verify. They'll tell me if I'm wrong or not. I think I've gotten most of them right over the last 6 months. I know I missed at least a couple of those. But even if I'm getting 4 out of 6 correct, that's a crazy big edge for something that is hard to predict. So again, I used to think there was no edge in doing it, I guess, is the point. Like, I used to think there was no edge in predicting and that I was just straight up guessing, which I kind of was. But what context I was taking into it was balance, right? So my context of predicting these is just balance. I look at balance. What's the balance look at it? What was it last time? How much is it increased or decreased? And then I use that balance to make the prediction. And again, I've been right 3 times in a row now. So maybe it's something. I know there's some derivative sites that you can actually bet on these. Like I've had people email me, sponsors email me, that operated derivative trading sites where you could bet on like rate decisions, elections, and stuff like that. And so maybe I should look into them, because I've had a couple reach out to me that like derivative platforms. And so maybe that's something I should try to do. Because I think even if I know what CPI is going to show up as, it's a lot harder to actually profit from it, right? Because CPI can come in high and the market could go up, which the inflation could be higher, market could negatively react, it could positively react. We don't really know how the market's going to respond, even if I know what the CPI report's going to be. So, it's a much more difficult thing to capitalize on versus just predicting it, which is kind of where, again, the derivative sites come in here. I wouldn't say it's good or bad. 0.2% is slightly higher than the expected number, meaning it's slightly worse for inflation problems. Was. So it's slightly worse for inflation, right? So that basically means PPI inflation, producer prices, have increased 0.1% higher than expected, like have increased more than expected month to month versus, now inflation's almost always going to go up. The best we can do is try to slow it down. But to put it into perspective, last time PPI didn't grow at all month to month. It remained at zero increase month to month. This time they expected a 0.1% increase, so already a 0.1% bump up versus the last report. And instead it came in at 0.2%. So really, if you look at this, and PPI was 0.2% higher than last time and 0.1% higher than expected. So inflation was worse than expected in that way. And so that is probably why the market negatively reacted, as well as, again, jobless claims, which is how many people are filing for unemployment week to week, increased at a greater level than expected. Last time it came in at 228. Last week, this time they were expecting 227, and then it showed 230. So, more people filing for unemployment than expected and than last time, according to jobless claims numbers. Yeah, I mean, maybe we had weakness. Maybe we enter a recession. Again, I hope that I can help people, because a lot of people push for big market crashes and corrections, and they always say we're going to hit a recession or depression. They always say the market's going to crash. And again, I've been having people in my chat room saying the same thing over and over again for years, and they've been wildly wrong. It's kind of like Michael Burry years ago. Like a year and a half ago, Michael Burry basically put out there, everybody was telling me the market was going to crash. I'll actually show you what it looked like. So here's the NASDAQ 100 QQQ ETF, right? So here, everybody was telling me the market's going to crash. Michael Burry did a really cryptic tweet where he said, quote, sell. One word, and he just said sell. And so all his fanboys were out here, and I like Michael Burry, to clarify. But all his fanboys were out here telling me the market was going to crash and burn. It's the end of the world. The big banks were putting out negative sentiment. And then the FOMC meeting happened. The market pumped up from it. And Michael Burry eventually deactivated his Twitter account. And had to come out and apologize and say he was wrong later on, months later. And then following this, the S&P, the NASDAQ, had one of the best years last year at 20+% gains. And so you can bet against the market. This is why I always tell people, look, you can bet against some stocks. And I use the examples of Peloton, Dish, Dollar General I was talking about earlier. There's some weak sectors that you can profit on their demise. But betting against the strongest index funds in the world, it's not the move, in my opinion, right? Maybe there's an edge there. I don't think it's very big. I think it's much easier to find weak, overhyped up mid-cap stocks that have just gotten extremely overhyped and profit from their downfall more so than betting against the strongest indexes in the world. It's just the odds are stacked against you, and so I don't even know what the point is of that. But hey, everybody's different. I'm sure some people could do it, but not me. Yeah, gold's been pushing up. Again, though, the problem with gold is that it can downtrend for long periods of time. And so because of that, I'm very, very careful with it. I don't want to risk, like, I'm not trying to risk getting stuck in a 10-year downtrend for gold. You know, like, I just don't want to get stuck in a long-term downtrend for gold. It's just too risky to do so, right? So I would much rather I'd much rather wait for gold to start long-term downtrending and then DCA into it over that period of time versus buying gold as it's been breaking highs over and over and over again for a year straight now, or longer than that. How long has gold been breaking highs? Gold's been ripping up. Here's this year alone, 2024. So yeah, gold is up. Yeah, gold is up 25% this year, just in 2024, and it's not even the end of the year yet. So for me, that's not when I want to buy gold personally. And I might be wrong. Gold might just continue to increase dramatically. But I think you're always going to have doomsday whisperers like, oh, the market's going to end. It's the end of the world, you know. Sometimes they're like politically biased because it is an election year. But I don't know. For me, it's just not the time to buy gold. Personally, I might be wrong. I like gold. I think gold's a great long-term inflation hedge. But again, short-term, there's risks. $50 basis point cut. Oof. Yeah, I don't know. Not with the higher inflation data we got today. Anything's possible. I hope we don't do 50. 50 would be a mistake. Right now, the probability of a 25 basis point cut actually increased. This was 74% last year. Or, I'm sorry, this was 75 or so percent. I can't remember what it was. Yesterday, it was 75%. Now it's 85-15. Meaning 50 basis point is 85-15. 85% expecting a 25 basis point cut, which is good. I think that needs to happen. I don't want to see anything over 25. Again, if we do cut rates over 25, which is pretty low probability, the market's going to panic, in my opinion. And I think Powell, people say all this bad stuff about him, but one thing he tries to be is balanced. So I hope he doesn't rip the Band-Aid off and do 50. I think that would be a mistake. All right, guys, we got 25 minutes until the market opens. Again, hit that subscribe button. We need 20 subscribers only to break 146,000. Do it now. Hit that subscribe button. Try it one time. It might feel good. Do it now. Next week, again, we got the Fed decision. We cover all this stuff live. We don't sell a course. I don't sell my own service. I don't even claim to be a good trader. I report all this stuff completely free. And the reason we get thousands of people tuning in for these is because we cover it quickly. Today's PPI report, we had it within like half a second of 8:30. And so that's the reason we get thousands of people here, as well as like we're reliable. We cover every single big event in markets, whether it's earnings, Nvidia, Jerome Powell, FOMC meetings, economic conferences, inflation data, retail sales data next week we're going to cover. So everything, if you want a one-stop shop for all that stuff, subscribe, hit the notification bell. I appreciate it. Yeah, I agree. It's been a while since I've looked at some of those altcoins. Rational. Mahogany John. Yeah. Look at this rich mahogany everywhere. Look at that rich mahogany. All over the place over here. And it feels really good to grow this channel, dude. Honestly, I had a lot of people be skeptics on my channel, right? Like, I don't know how many friends I reached out to, and I was like, yo, I'm going to start a stock market channel. Do you want to join it with me? And some of them would be like, yeah. And then I'd never hear from them again. Family members. I reached out to like some family, and I was like, hey, I'm going to do this. You can own 10%, 20%, 30% of it or whatever. You just got to do this, ABC. You got to do X, Y, and Z. And, never heard from him. So now that the channel's big, feels good, man. Feels good. love the honesty of this guy. He knows he is not that good. Yeah, I'm definitely top 3 worst ever in trading right now. Yeah, so trads. I'm definitely one of the top 3 worst traders of all time in the world. Fernandez. First they mock, and then you hear crickets. Yeah. Hey, thank you. Wow, I appreciate it. Like I said, growing a YouTube channel is difficult. It's not easy. The problem is like this, right? And I see a lot of people do the same thing. And the trading industry saturated, right? So traders on YouTube, I got in whenever nobody was doing this, so that's one of the reasons I was able to get like a head start, because I got in whenever nobody was doing it. When I started streaming, nobody else was streaming. Not really. There's me and maybe like 2 or 3 other people. That's it. And one of the cool things is like I could see how my channel changed the industry. Like I see a lot of people copy off of my keywords, and they're using literally verbatim the same titles, the same stuff that I'm using. So I can see that I changed, and again, I'm not saying there weren't people before me that were bigger, of course. But it's cool to see, right? It's cool to see. I've kind of evolved it towards economics. Like I started out day trading penny stocks, and then I got my butt kicked doing that. Eventually started day trading the S&P, the NASDAQ futures, and eventually evolved to more like economics over everything else. And again, I feel like some people followed me here too, because again, I'm more of an economist. I like the economy. I like understanding it. I like understanding business, and I do trade. I do invest. I do swing trade, but I think there's enough day trading gurus out there, and so it's more fun to be in an economics channel anyway. John, do you think the market's going to go down with rate cuts? I don't know. I think if it's 25, yeah, I think one of the things this shows you is that you can tell people you have no idea what you're talking about and still grow massively on YouTube, which is fun. I think people appreciate that I'm not trying to act like I'm better than I am. I think I'm good. So sorry, I was answering a question here. What was it? Do you think the market can dip down with cuts? I don't know, man. I think, personally, again, I'm against cuts. You guys know this if you watch the stream. I'm against rate cuts. I think we've seen massive inflation over a 5-year period. I just don't want inflation to spike again. I really don't. Because, again, I see it as unsustainable, right? It's not going to be able to sustain itself if, okay. Anybody should understand the difference between today and 6-7 years ago. 6 and 7 years ago, making $100,000 a year meant something. It genuinely meant something. Like you were in the top whatever percentage if you made over $100K a year, right? Today, it's not that much. $100,000 a year is not that much. And so it's kind of like the goal line was moved back some, is the problem. And this affects everybody. It doesn't just affect the wealthy. It affects everybody. Everybody should be concerned about that, because again, and I'm sure we have some people here that make 6 figures, that make over 100K, and this might hurt to hear that 100K is not as big of a flex as it was 6 years ago. And again, the problem is that if we try to stimulate the economy too much, that's the consequence of it, is that the goal line gets moved back for everybody. And so for me personally, I would rather see real estate correct and go down, even though it's going to negatively impact me some. I would rather see the market go into a recession or depression if it means that inflation stabilizes long term. Because again, gold just broke lifetime highs with all this inflation talk. Gold just ripped over lifetime highs. It got up to 25.7230. As I'm saying this, 25.7230. Gold just broke lifetime highs. Huge 2 green candle movement here. Look at the volume influx of gold. Wow, so gold just broke lifetime highs. But yeah, the point is, everybody in this chat room right now, the 1,000 people we have here, you guys should fear inflation. Regardless of how much money you make, regardless of anything, you should fear inflation drastically. because you might work really hard at something and then have nothing to show for it because the goal line was moved back. The only people that don't care are people that really make nothing, and so they're just kind of mad at anybody that does make good income, and so they're just going to lash out regardless, right? But anybody that works hard to build stuff in business should fear inflation. All right, so gold broke lifetime highs. Yeah, well, Silicon Valley is just a different story. Yeah, I mean, pity stocks. The problem with pity stocks is the marketing. Best part about you is you talk to people in the chat. We try. But yeah, pity stock marketing's out there. I appreciate the knowledge sharing and integrity without being sold to. The most you'll promote is an affiliate link. Yeah, I mean, again, I could sell a course and probably make millions of dollars with the following that I have doing it, if I was sleazy enough, that is, right? I'd have to be kind of sleazy to make that much with it, but I certainly could, I think. Maybe not, I don't know. For me, I would rather be honest with people and profit on the back end of that honesty. This is a completely blunt truth, right? I would rather be honest with people. It's going to help my brand. It's going to, ultimately help people support what I do and then profit on the back end. And I certainly do this to make money. I say this a lot, but I do this to make money. Of course I do. I'm sitting here for freaking hours and hours every day. I would love to pretend and say, oh, I'm just a kind guy, a great guy over here. I mean, I am top 3 greatest guys ever, but I do this to make money. My business model is more so just profiting on the back end of that, which should be okay. It should be understandable. I'm providing a value service, economic data, earnings, stock market info, all that stuff for free, and I'm still making money from it. So it's kind of a win-win scenario versus selling a course, trying to mislead people into buying it. And again, there's some courses that are good. I'm not against all courses, but that's just the way that I chose to design the channel. Anyways, gold breaking highs up there. Let me put the music on. Right, 100% Ed. I'm a capitalist for sure. Everybody that trades stocks should be a capitalist, right? I'm not like pure capitalist. There's some, I think college should be free. I'm okay with billionaires getting taxed a little bit more, but I don't want it to stifle innovation, So I'm really kind of middle ground, pretty middle ground in nature, right? Just to be honest, and that's why I don't talk about politics, because if I did, everybody would hate me, which is, I guess, where I would like it anyway. But yeah. I don't understand. The SPY is very choppy right now. I think, honestly, my theory is that the market might be sideways leading up to the FOMC decision next week. Right, inflation's not a big concern if you own assets, sure. And it's going to go up over time. It's only day trading. Regarding Topstep, it's only day trading. It's a funded account program. Most day traders lose. They're going to give you a demo, test your skill. If you pass the test, they fund you. If you fail, you lose the monthly subscription, is basically what it is. Go to their website. There's a lot of good info on it. And again, if you want to check it out, they are an affiliate of mine. They pay me money, so I'm biased. But if you want to check it out, there's the link. It's a great way to learn day trading. Have reasonable expectations for it. Most day traders lose. Understand if you lose here, you're probably going to lose much more than that if you put up thousands yourself. And that's the context you have to take. But yeah, there it is if you want to check it out. Hey, thank you. Thank you, Cal. Appreciate it, man. I've never really got into Forex. Forex is too hard to get set up. And most of the time I like trading equities. And I can trade equities and futures. And so that's why I trade futures. With all that said, look at gold breaking lifetime highs up here. Yeah, I'm going to put Nvidia in gold up right here. Look at gold breaking lifetime highs. It's up there, though, too. It tapped lifetime highs, came right back down. And I always say this, but sometimes those levels are like a freaking magnet. Meaning sometimes, whatever it is goes right up to those levels, taps it, and then comes right back down and never touches it again for the remainder of the day. I see that type of movement pattern a lot. You are legit, man. Keep it up. Hey, thank you, Raphael. Appreciate it, brother. What about services inflation? How will assets pay for those? I mean, services inflation is just mostly just general inflation, right? Like core inflation is really what that is. But assets are gonna help keep up with it to a certain extent. You know, the logic of real estate's the easiest one to show. You know, say I got a $300,000 house. If I make 1% of that a month in rent, using the 1% rule, I'm gonna make about $3K a month in rent. That means yearly. And just cash flow, I'm gonna make $36,000. You can take probably like 40% of that off, in insurance and expenses, right? So really, $300,000 house, you're gonna net about 22K income per year. Extrapolate that over 10 years, you're gonna make about $260,000 in cash flow over a 10-year period. If we look at the percentage of that, that's like what kind of percentage return is that? That's like what, that's like a 90% return. What is this? Let me see. What is the 259 is what percentage of 300? What is that, like 90? Oh, wait, sorry. Yeah, it's 86% return over a 10-year period. So over 10 years, you're made at 86%. You know, and then this is not even including compounding appreciation. And so what do I mean by that, right? So what I mean by that is, you know, you're going to make about 10% a year just in terms of cash flow. Maybe not 10%. I would say maybe like 7-8%. That's kind of what the S&P 500 gives you anyway. And that doesn't even take into consideration appreciation. So if I have a $300,000 house, let's say it grows at 3.5% every year. So I can do times 1.035. So a 3.5% gain yearly. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, I'm going to profit about $123,000 in appreciation alone. And that doesn't even include the cash flow. Right, so $123,000 in appreciation alone, and so that is 41% in that regard, right? So you could do 41 divided by 10. It's going to give you about 4.1%. So you're going to take about 8 or 9%, and then you're going to add it to this number. And so that means that in real estate, it's not passive, but you can make over 13% a year on average. And that doesn't even include appreciation over time. So if you use the 1% rule, like I said, that $300,000 house in 10 years is going to be worth about $420,000, right? And so if you use the 1% rule, then you should be charging about $4,200 a month, right? And so then your rental income is going to increase with compounding anyway through the appreciation aspect of it too. And so it's probably going to be more than that, right? And so that is why, and that generally will outperform the S&P, the NASDAQ. Now, it's not perfect like this. Like, there's probably going to be some fees that I'm missing. But yeah, point is, you can make it's just another inflation hedge. And so how does this keep up with inflation? Well, making 10% a year is usually going to beat out the average inflation rate of 3 to 4%. You know, so generally that's how you beat inflation. You can also do it with gold as well. You can do it with a lot of other assets, not just real estate. When you get into like commercial investing, it can be a lot more powerful too, but commercial might be kind of a risky thing right now. Just ignore inflation makes returns look awesome. I mean, you're missing the entire point of that, brother. You're missing the entire point of that. The entire point of this is to hedge against inflation. So we're not ignoring inflation. You buy real estate to hedge against it, you know? You could use inflation. You're still going to be earning with inflation included, right? Let's say inflation. Again, you made about 13% a year on average, right? Let's take 3.5% of that away in inflation, and you're still going to be profiting net-wise, including inflation, almost 10% a year. So it's still, you know, in that regard, a good long-term investment. Long-term, that is, you know. But the whole point of it is to hedge against inflation to begin with. So, you know, acting like I should subtract inflation to it, again, you're missing the point of it. The reason you invest in the S&P or the NASDAQ is the same thing to hedge against inflation. The reason you buy gold is the same thing to hedge against inflation. You know, the reason you buy whatever you could think of as an investment is to hedge against inflation. I already did property taxes. Again, I took 40% of the cash flow out of the property, which depreciation, fees, expenses, you know. I'm new to trading, trying to understand futures so I can scalp crypto. So far, I'm learning from you, bro. Thank you. Just subscribe. Thank you daily. Futures, I mean, I don't know if you need futures to scalp crypto. You probably just want a crypto account, brother, personally. Futures, mostly commodities driven. So like gold, silver. You could do the S&P, the NASDAQ futures contracts, but you could also do like corn, cattle prices, coffee, you know, all this different commodities. That's what really futures was originally created for. All right, guys, we got 7 minutes. 7 minutes left. And again, guys, like, if you find somebody, like, you hear people all the time be like, hey, if you don't trust any of the stuff that I'm saying, you can always just buy bonds, right? Buying bonds are loaning the U.S. government money, and it's a guaranteed return. And so if you look at most, like, short-term yields right now, here's the 10-year yields. Are they all the way down? Wow, 10-year yields have fallen. So 10-year yields currently paying 3.6%. 3.6%. So say you buy $100,000 worth of 10-year treasury bonds. You're going to make about 3.6% of that every single year. So you're going to make about $3,600 a year in interest payments. And then at the end of that 10-year period, you're going to get your 100K back. So you're going to make about 36% on your 100K investment. And it's guaranteed by the government. And they'll pay you interest every single year. And then at the end of that 10-year period, you get your 100K back. This is what bonds are. If you ever hear the word bonds, bills, notes, these are all bonds. And it's basically loaning the government money, treasury bonds specifically. And you might hear somebody say, oh, well, what if the government's not around in 10 years? Like, dude, if the government's not around in 10 years, you got bigger problems than your bond yields not paying out, brother. You know? So, again, the point of this is, like, if you sit on cash, you're going to lose money, you know? You could literally just buy bonds with it if you're worried about losing it to inflation. But what about futures on the Dow? Yeah, I don't really trade Dow futures. I mean, I have, but it's not my favorite thing to trade for sure. I usually like trading like the NASDAQ or the S&P. Yeah, I mean, Eli, it sounds like you're getting really politically biased. You know what I mean? But like, what I would say is, regardless of who wins, who you're rooting for, anything like that, the S&P, the NASDAQ, the Dow, gold, you know, real estate, all very, very, very safe long-term investments. Generally, I'm not telling you to buy any of them, and I have no idea what's going to happen long-term with any of these assets. Not an investment professional. Don't sue me. I'm not liable. You're not going to win. But I think, you know, when in doubt, you got to zoom out. And long-term, the S&P, the NASDAQ, over a century of data, very consistent, very consistent. I also think there's a lot of fear and doom and gloom people right now because it's an election year. And so what happens during election years? Everybody's saying, oh, it's the worst it could ever be. Cough, cough, elect our guy, you know. And the other side saying, hey, it's the greatest it's ever been. Cough, cough, keep our guy, you know. The truth is somewhere in the middle. So, you know, you got to stop, take a step back, understand these are all pretty solid long-term investments. Short-term, they're risky. Anything could happen short-term. Prices might go up or down. They might stabilize. Long-term, they're pretty safe. Right? I'm not saying they're 100% safe. Anything could always happen, and I don't know for sure anything. And so do your own assessment, figure it out yourself. But if you don't invest and you sit on cash long-term, you are losing tons of money. Tons of money. You know, let's say 3.5% a year, the example we use. You got 50K. All right, that's 2.5%. 3.5% would be 50K times 965 for 3.5%. So let's say 3.5% inflation over time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you're going to lose 15%, or you're going to lose $15,000 out of $50K in buying power over a 10-year period. So basically in 10 years, your $50,000 is only going to be about $35,000 in buying power relative to today. And so if you don't invest in something, you're losing money over time. If you sit on cash long term, you are losing money. That's a terrible idea, David. My guess, David. So David says, what do I do if my partner thinks buying natural diamonds is a good investment? Literally, she's dumping cash into nothing. I think that I might understand the thesis, which is that lab-grown diamonds are becoming really saturated and oversaturating the market. And so in that regard, you could theorize that natural diamonds, because of that saturation with lab-grown, are going to increase in value over time. But the problem with the diamond market in general is that diamonds are not as scarce as you think they are. They're mostly driven by jewelers, right? Like, so jewelers push artificial scarcity in that regard for natural diamonds as well. And I think the other more probable thing is that the competition that lab-grown diamonds cause is going to make real natural-grown diamonds prices decrease just from over competition, right? I think that is the more... Again, I have no idea. I might be wrong, and maybe natural diamonds increase over time. But diamonds aren't generally the best inflation hedge you could use. There's a lot better inflation hedges, in my opinion. And diamond scarcity is mostly controlled by the jewelry market. And so it's a risky thing. All right, guys, market's about to open. And again, maybe I'm wrong. I have no idea. What short-term cap gains is what it would be, Faye, I think, but I'm not a tax professional. I might be wrong. Go reach out to your CPA. All right, guys, 20 seconds. All right, here's the opening bell, guys. Let's do this. We're going to try to day trade and come out alive. We'll see if it works. We made some money today. We made some money. I mean, we're going to come out okay, but... Nvidia actually going green on the day slightly. I'm going to put up gold. Gold's testing lifetime highs. Nasdaq's falling down some. So we bought a little dip here. It's pretty close to the opening bell. I don't really like doing this. I think it's kind of risky. But I'm going to add to this and see if we get a pop rebound back up. All right, we just took half of it off. I got in too big of size at the opening bell with 2 contracts. I think I like the bounce potential here because we dipped so much at the open, but it's risky. And so I had to cut a piece of this just to be safe. And I don't know if I like that retracement back down here too. Small, yeah, I'm going to cut that. So we lost 25 bucks there. Still green on the day. But yeah, a risky trade for me. So I'm going to wait. I should have waited. I usually like to wait at least 3, 4, 5 minutes before I start taking trades. Tesla push it up though, but yeah. A lot of downfall. If we drop enough though, I will buy this. There we go. All right, there we go. All right, so we just made all our money back plus some. We made about 35 bucks there. Call it the rebound. Tesla running up. This is why I like buying. Like, so again, remember what I said earlier, guys, where I said if we drop enough, a small bounce at least is very probable, right? So the reason I started buying this is because look at these huge drops we got at the opening bell, right? Generally speaking, again, even if we end up going down eventually, we're at least gonna pop up some. Not always, anything could happen, but I've been playing those a lot more. If you watch my actual trading, I've been playing that a lot more. Again, extension short term is one of my favorite things to play lately. Nvidia churning all the way back up. I'm going to do the same thing. I'm going to short this now. Oh my gosh. I didn't mean to sell that. I accidentally lost. It's all right. All right, we got 2 contracts now. Definitely a risky position, so don't copy me. Oof, retrace back up. I'm gonna let it try to stabilize here. We got a cushion on the day. I'm gonna add to this. It's a risky position here, but there we go. All right, we took 2 off. Took some more off. Bad fills, but we're green on the trade overall at least. Might add back to it. I think we're going to reject and come down, but I might be wrong. Okay, so we got 3 contracts here. All right, so we made net profit here. I don't know how much. And there's the rejection. So we were correct about short-term price action. Again, we're at the top of the range. We got that big rejection. It doesn't mean it's going to hold, though. I am trading NASDAQ futures, micro futures. Yeah, there's the drop. Well. Tell me your extension, one of the best short-term edges. Tesla pumping up though, guys. Tesla breaking almost up to 230s at 229.30s. So Tesla is one of the stocks that are dragging the market up. Nvidia is coming down though. This is the micro NASDAQ. But yeah, it's basically the QQQ price action in futures. I'm trading on Topstep X, which is a funded account program. It's a 50K funded account on Topstep X. Gold's right at lifetime highs again. Not quite there, but it's close. We took a little bit more from it. My friends call me dumb to buy gold. It depends on how long you want to hold it. Right, gold, good long-term inflation hedge. Short-term, can downtrend for 5+ years. You know, so it depends on if you have the tolerance to be able to buy it. You know, the risk tolerance. Short-term, long-term is pretty solid, but short-term, anything can happen. So there's a big rip up. Look at that big move. Slow edge higher. Look at Nvidia pumping up. So Nvidia's dragging the whole market up. Look at it. Nvidia's almost up to 118s. Gold is not very volatile though. I mean, it can be. It depends on what's going on. It can be volatile. I think you might be able to trade the micro Bitcoin C, but I'm not 100% sure. I would check with them. Tesla's still breaking highs. No red candles yet. Only one kind of neutral candle, but no red candles for Tesla yet. It's all the way up to almost 231s now. SPY is only $10 away from lifetime highs as well here. Hey, so we did break 146,000 subscribers. We're exactly at 146K. Hey, thanks so much. All right, so market's kind of flat. Nvidia's still churning up though, and that's breaking highs. Is gold. Another thing that's breaking highs, I mean, is gold. Gold's still up there, still moving. Yeah, I mean, I'm gonna buy this out. Yeah, up about 100 today already, so got a nice little trade style. We're up hundreds on this account. Slow but methodical gains here. Alright, we got 2 contracts. Alright, another 20 there, so we're up over 100 now. I'm
I'm going to slow down and wait. Gold breaking lifetime highs. Gold up to 25.75 for lifetime highs now. 25.75. ESPN fired Shannon Sharp. Wow. Is this real? Oh, I haven't seen the video. Oh, yeah, I'm just now reading up on that. Anyway. Kind of a choppy day right now, guys. Choppy day. Again, we're up over 100 right now, I'm pretty sure. Yep, we're up over 100. You love to see it. Slow, methodical gains. Yeah, it's kind of boring, though, guys. I'm not really... You know, I gotta just chill and wait, I guess. Again, hit that subscribe button, hit the notification bell. Guys, listen, everything we do here is free. I don't charge for content. I don't sell a course. I don't sell my own service. I don't even claim to be good. I put out everything for free. If you want a one-stop shop where we're going to cover economic data, earnings, Jerome Powell press conferences, FOMC meetings, and decisions, we not only stream when the big earnings come out, but also the earnings call as well, which is not something most people do. Most people either stream just the call or just when the earnings drop. We stream both. Okay, we stream CPI, inflation data, PCE, GDP, Powell, Jensen Huang press conferences when we can. Everything for free. We don't charge a penny for it. And the reason we get thousands of people at 8:30 for those releases is because we cover it faster than everybody else. And anybody really knows that. But again, you do claim that you're the top 3 most handsome trader on YouTube. Oh, I'm definitely top 3.5 right now. Definitely top 3.5. I mean, listen, I'm definitely top 3 most humble also. You know, that's why I'm top 3 and not number 1. But listen, when you look this good, you know, humility just comes to you. I don't even have to work to be humble. I'm just naturally gifted at being humble, and the humility flows through me like water. You know, that's all I'm saying is I'm just, you know, and listen, I guess that's why we got haters, because when you look this good, people are going to be like, man, I wish I looked like John. And they're going to hate, you know, listen, thus is life, guys, thus is life. Yeah, I'm definitely the best at being humble. I would agree 100%. For sure. Beard is the GOAT as well. Mahogany John is my new name. That's what I'm saying. You see this office right here? Mahogany John. I'm going to get that tattooed on me somewhere, you know. I'm going to get Mahogany John right here. Like right above this on my bicep is going to say Mahogany John, you know. I'm going to do a poll whether I should do that or not. I got to shorten it somehow. Cow in there getting those. That hurts, bro. That hurts right here. Cow. Yeah, Forrest. Saying I look like Forrest Griffin, bro. How dare you? All right. I don't know. Young Forrest might not be a bad comparison. But old Forrest? I'm pretty sure he's a little punch drunk, personally, right? Let me see. Old Force, you know. I almost got cauliflower ear too, honestly. My ears have been hurting for like a couple weeks. And so if I get cauliflower ear, which I'm not, I've got the magnets that I wear, so I don't get cauliflower ear. But yeah. Yeah, Brown. I think the joke went, you know, it's all right. I don't know if you should short it. The market looks completely sideways and kind of boring. Gold broke lifetime highs, got up to 2580s. So gold is up there. I've just kind of slowed down my trading. We're already up over 100 in the funded account. And I'm in the early stages of the funded account here. So like I am taking it very slow, very careful. I'm up hundreds, but I'd rather be up thousands before I start taking big risks. So that way, you know, that's how you do it. The Russell's going down. Russell is /YM for everybody that wants to follow. Yeah, Russell is falling down. Interesting. Small caps usually are inversely correlated with index funds, major index funds. Oh, no, I'm sorry. You're right. Correct. I am wrong. I retract my previous statement. The Russell is RTY. YM is the mini Dow. It's down too, actually. But yeah, the Russell is down also. I mean, GameStop's dropping, but the lows of the last 2 days are at 1930s for GameStop. So it's still got, it's fine. I mean, I don't know if it's, I don't know. Looking at our poll numbers here. So we did a poll. 57% said PPI is higher than expected. Yeah, I'm going to end this poll. We got 2,500 votes or 2.1K. 57% said higher. And we kind of were higher. Did the chat get something right? I think the chat did. Congratulations. You know, it's been a long road here. But the chat got something right. Maybe it's just because I left the chat up for like an hour plus after the results came out. So they already knew the results and could vote appropriately or accordingly. But yeah, the Russell's still falling. Honestly, the Nasdaq's down. Nvidia's technically red on the day too, so the market's starting to turn. Again, I think we could get choppiness for the next few days leading into the Wednesday report. But yeah, we'll see. And again, if you haven't already, we are trading. We're up over $100 today. You can see my full list of trades here today. This is my full list. And again, this is the big power of Topstep X, right? Topstep X, there's no commissions, only a small amount of fees, and which means that I can trade micro futures contracts on Topstep X. Take these little small trades, let my edge really play out. Again, it's the best edge in funding right now, in my opinion. It genuinely is, right? I think it ultimately allows traders to trade small like this. You can see here, so I have had this. And again, if you want to check out Topstep funded account program, they give you a demo, test your skill with it. If you pass the test with the demo, which is $50K for the base one, they fund you $50K, 90% split, which 90% similar to putting the money up yourself. But if you lose, you only lose $50 basically. It's not the end of the world. It's a great way to learn how to day trade, still have some pressure. You're still risking something, but you're not risking thousands and thousands of dollars per account like you normally would have to. And most new day traders lose, and so it's the perfect middle ground in my opinion. And again, Topstep X, the biggest edge in funding. You can see here on my trades, we have had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 trades today. So we have 20 trades. Percentage-wise, if we look at this, so we've had 20 trades. We have had 1, 2, 3, 4, 5, 6 losses out of 20. 6 losses out of 20.
which would mean 14 out of 20 is 70% accuracy today, guys. 70% accuracy today for my day trades. We're up enough. And again, we're slowly trying to build up profit. And so if you want to check them out, here's the link. They are a sponsor. They pay me money. I'm biased because of it. But again, if you want to check them out, link is in the description. And yeah, I'm probably just gonna bow out for the rest of the day, guys. I don't want to give back my profit. It's a good day. It's a green day. I think we're gonna end up trading a lot more actively in the coming days leading into the FOMC meeting. I think we're gonna have choppiness, and so I'll be able to capitalize on that using my system. And so we'll see how that goes. And yeah, I mean, I have 4 monitors, and so yeah, I'm using indicators for sure. But usually me using indicators looks like this. Right, so here's Topstep X. I am looking at Nvidia because Nvidia basically moves the market. If you look at Nvidia, it's gone down, up, down. If you look at the market, it's gone down, up, down. Right, so I can look at Nvidia and see Nvidia fall. Look, Nvidia starting to rise up here. If I get the screen out the way, like look. If I get the screen out the way, upward movement, upward movement. You know, so Nvidia influences the market. That's why, like, if you want to day trade futures, it's probably what you should do. But the point is, I'm looking at these indicators. If you look at this previous closing price, I'm using that to influence my trades over here. I'm looking at the 200 EMA right here. I'm using that to influence my trades. I'm looking at the volume weighted average price. I'm using that to influence my trade. And then I'm looking at the ranges. So I'm using indicators. You're just not able to see them. Anyways, guys, I'm getting out of here. Hey, I love you all. Y'all be good. Be careful in these markets. Not an investment professional, so y'all be safe. Trade small, guys. You don't need to trade super large. Don't listen to gurus trying to get you to trade crazy size. It's just unnecessary. And I'm going to get out of here. Hey, y'all be good. I'll see you guys later. Try Topstep X, Raphael, if you want a different platform. Topstep X is the one that has 0 commissions. Yeah, it's not NT. It's a different one. But anyways, I'm out of here, guys. Y'all be good.